development of the Saudi capital market. And now, ladies and gentlemen, to officially open our proceedings, it gives me great pleasure to introduce the first Saudi woman to chair the Saudi exchange, the largest stock exchange in the Middle East. And now the group chairperson of the Saudi Tadawul Group, Sarah Shami, the stage is yours. And now the group chairperson. Okay, so هنا the forum will also conclude with the presentation of thank you. The Saudi Capital Market Forum will set the stage for 2 days of discussion and dialogue about the future of capital markets and foster collaboration and conversation towards the advancement of the industry. 2022 was a transformational year for the Saudi capital market with a record number of listings and IPOs. Against this backdrop, the 2023 event is being held under the theme of Building the Future of Capital Markets Today. And we'll discuss the development of local and regional capital markets through 4 tracks. Before we take a look at what we have in store for 2 days, we've got a short video showcasing the journey of the Saudi capital market. So بعدين هنا عندنا review. A very bold vision indeed. And now the agenda for the next 2 days. The 2 tracks that will be discussed today are the evolution of a global capital markets, ESG, a push that will reshape the future of investment. The forum will also conclude with the presentation of the Saudi Capital Market Awards 2022, recognizing excellence and leadership displayed by market participants who are championing the development of the Saudi capital market. And now, ladies and gentlemen, to officially open our proceedings, it gives me a great pleasure to welcome the first Saudi woman to chair the Saudi exchange, the largest stock exchange in the Middle East, and now the group chairperson of the Saudi Tadawul Group, Sarah Shami. The stage is yours. Okay. Thank you, Sarah, for getting our forum off to a great start. Looking forward to hear more about where the Saudi capital market can go from here and how we expect to achieve such grand ambitions. Let's kick off. Let, قل لي. تفضل.
ثواني بس ثواني بروح عشان الشاشة هتفصل.
أيوة انتبه عشان الأسلاك. تسلم. Let's kick off track one of the Saudi Capital Market Forum that will discuss the evolution of a global capital markets through the lens of past, present, and future development. To start such an interesting track would be incomplete without hearing from the man who's in charge of the growth and development of the Saudi capital market, His Excellency Mohammed Al Guweiz, Chairman of the Board of the Saudi Capital Market Authority. He's joined on stage by Matthew Martin, the Bureau Chief of Saudi Arabia for Bloomberg. Welcome to the stage, Your Excellency. And Matthew, I pass the mic to you.
Sessions are live.
Saw that thing so beautiful. She just hit my heart, oh. Full force and she got me like, I be like, baby, why you so fine? Gotta make you mine. So hard to find. Baby like, oh, how'd you do the thing? The way that you do it and she ain't even show nothing. She be walking around so confident, so heaven sent. I think she was meant to knock them daylight. Like, girl, you so fine. Oh, 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 yeah. Girl, you rockin' like, baby, so fine. Miss Baby, girl, you knock 'em dead. She was so sublime, super fine. She was never lying, strutting in the heels or her slides. Either way, eyes on her every single day, week, year. Everyone wondering how she does it with no fear. All that confidence, was it heaven sent? Does it come within? Does it come run out? I don't know. She'll just have them running out and in. Man, they want to sin, talking deadly sin with Mrs. Lady. I don't understand why she hit them like. Girl, you knock 'em dead. Oh, oh, oh. How you do it, things you do. Baby, you knock 'em dead. I'm already said.
بناء ما ترونه اليوم من سوق مالية متقدمة منفتحة وجاذبة للاستثمار المحلي والعالمي لم يكن بالأمر الهين، ولم يكن ليحدث لولا توفيق الله سبحانه وتعالى وسواعد شابات وشباب.
Ladies and gentlemen, we will commence shortly. Please be seated. Thank you. Ladies and gentlemen, we will commence shortly. Please be seated. Thank you.
Your Excellencies, ladies and gentlemen, please take your seats. The event is about to begin. Your Excellencies, ladies and gentlemen, can you please take your seats? The event is about to begin. Your Excellencies, ladies and gentlemen, please take your seats. We start the event in 1 minute. Thank you.
Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, Your Excellencies, esteemed guests, ladies and gentlemen. My name is Mohammed Dakhil, and it's my great pleasure to be your host for the second edition of the Saudi Capital Market Forum 2023. Held under the patronage of His Excellency Mohammed Al-Gweiz, Chairman of the Saudi Capital Market Authority. The Saudi Capital Market Forum will set the stage for 2 days of discussion and dialogue about the future of capital markets and foster collaboration and conversation towards the advancement of the industry. 2022 was a transformational year for the Saudi capital market with a record number of listings and IPOs. Against this backdrop, the 2023 event is being held under the theme of Building the Future of Capital Markets Today, and will discuss the development of local and regional capital markets through 4 tracks. Before we take a look what we have in store for 2 days, we have a short video to showcase the journey of the Saudi capital market. Let's watch.
بناء ما ترونه اليوم من سوق مالية متقدمة منفتحة وجاذبة للاستثمار المحلي والعالمي لم يكن بالأمر الهين، ولم يكن ليحدث لولا توفيق الله سبحانه وتعالى وسواعد شابات وشباب الوطن الطموح. مستقبل المملكة العربية السعودية واقتصادها مشرق، ونؤمن تمام الإيمان بأن الله سبحانه وتعالى سيمن على وطننا الغالي المزيد من الرخاء والازدهار. الأسواق المالية في المملكة العربية السعودية ليست بمعزل عن كل ما شهدته المملكة من حراك اقتصادي. وصلت القيمة السوقية للشركات المدرجة إلى قرابة 10 تريليون ريال سعودي بنهاية عام 2022 ميلادي، واستطعنا استقطاب أكثر من 3150 مستثمر أجنبي مؤهل، وذلك بدعم برنامج تطوير القطاع المالي أحد ركائز رؤية المملكة 2030. اليوم هو يومنا. اليوم تعتبر تداول السعودية من ضمن أكبر الأسواق عالميا من حيث القيمة السوقية. اليوم نحتضن فخرا أكبر شركة مدرجة في العالم اليوم نمتلك كنزاً من الثروات البشرية والطبيعية والمكتسبة التي أنعم الله بها علينا. اليوم هو يوم لكل سعودي وسعودية. اليوم سننجح وغداً سنتصدر.
A very bold vision indeed. And now the agenda for the next 2 days. The two tracks that will be discussed today are the evolution of global capital markets, ESG, a push that will reshape the future of investment. The forum will also conclude with the presentation of the Saudi Capital Market Awards 2022, recognizing excellence and leadership displayed by market participants who are championing the development of Saudi Arabia's capital markets. And now, ladies and gentlemen, to officially open our proceedings, it gives me a great pleasure to welcome the first Saudi woman to chair the Saudi Exchange, the largest stock exchange in the Middle East, and now the group chairperson of the Saudi Tadawul Group, Sarah Sahimi. Welcome to the stage. It's all yours.
Your Excellencies, ladies and gentlemen. I would like to welcome you all to the second edition of the Saudi Capital Market Forum, held under the patronage of His Excellency Mohammed Al Guwais, the Chairman of the Saudi Capital Market Authority of Saudi Arabia. A very special welcome as well for all our guests who are here in the kingdom for the first time, and welcome back as well for returning visitors. The pioneering computer scientist Alan Key once said, "The only way you can predict the future is to build it." The future of the capital markets need to be built, not anticipated. And as little as as the title of this year's forum suggests, that is why we are all here today. The forum now, in its second year, is an important platform for Saudi Tadawul Group to gather together capital market leaders from across the spectrum and engage in a meaningful dialogue. Over the course of the next 2 days, we are bringing together over 2,000 issuers, investors, and financial ecosystem participants to facilitate a deeper understanding of the significant structural changes taking place across our market and beyond. Over 1,000 bilateral, trilateral, and group meetings will take place during the conference. Saudi Arabia's capital market has been developing at pace, whether in terms of size, reach, or diversity. It stands out as one of the strongest and fastest growing investment destinations, with a value of $2.7 trillion. In part, this has been driven by the continued burgeoning strength of our IPO market. 2022 was a record year for the Middle East region as a whole. IPOs in the Middle East outpaced Europe for only the second time since the global financial crisis in 2009, with foreign investors continuing to buy into regional markets despite wider global volatility. The Saudi Exchange, specifically, has been at the forefront of this growth. Last year was another record year for listings and IPOs in Saudi Arabia, including our first dual listing. Equally, the debt capital market is another important facet of healthy public markets supporting the economic growth of the kingdom. We have seen continued growth in our debt capital market, underpinned by increasing appetite from both investors and issuers alike. Indeed, the number of trades in our debt market in 2022 increased almost 1.5 times what it was in 2021. All of this and more has been driving a steady upward trend in our ability to attract investors to the Saudi capital market, locally, regionally, and internationally. The number of registered QFIs in the Saudi exchange increased from being 118 at the end of 2017 to 3,151 by end of last year. That's an incredible increase in the last 5 years. The tangible result of these developments is a significant uplift in the liquidity of our markets, providing issuers with access to a much wider pool of capital and a testament to the increasing maturity of our market. By harnessing the growth of the last few years, Saudi Arabia has become a capital markets powerhouse. And the Saudi Tadawul Group, we have an integral role to play in this and in the kingdom realization of Vision 2030. As we have just seen in the opening video, we have big ambitions for the future. Saudi Tadawul Group has embarked upon an ambitious strategy to develop Saudi Arabia into a global financial hub. And over the next few years, we will build on the foundations that are in place. With a focus on strengthening our market, diversity and resilience, building the infrastructures that befits a mature capital market, and encouraging connectivity with other global markets, we aim to lead the way as a global investment destination of choice. Before I close, I'd like to take the opportunity on behalf of the Saudi Tadawul Group to express our heartfelt thanks to all of this year's sponsors for their incredible support, to our speakers for sharing their knowledge and wisdom, to all of our capital markets partners for their contribution to our thriving ecosystem. I wish everyone a fruitful discussion in the next 2 days, and I look forward to seeing what we can achieve together. Thank you.
Thank you, Sarah, for getting our forum off to a great start. Looking forward to hearing more about where the Saudi capital market can go from here and how we expect to achieve such grand ambitions. Let's kick off track 1 of the Saudi Capital Market Forum that will discuss the evolution of global capital markets through the lens of past, present, and future development. To start such an interesting track would be incomplete without hearing from the man in charge of driving the growth and development of the Saudi capital market, His Excellency Mohammed Al-Guweiz, Chairman of the Board of the Saudi Capital Market Authority. He's joined on stage by Matthew Martin, the Bureau Chief of Saudi Arabia for Bloomberg. Welcome, Your Excellency, and Matthew, I pass the mic to you.
Good morning, everyone, and thank you for coming, and thank you, Your Excellency, for this time. I think as we saw through the presentation and the video earlier on, this has been a very exciting time for the capital markets in Saudi Arabia. A lot of huge milestones achieved over the past couple of years. And I guess the question now, as we're at the beginning of 2023, is what next, and what does 2023 hold for us? So perhaps if we could start looking at the IPO markets. Clearly been a huge flood of activity last year. I think the question on everyone's lips now as we begin this year is how does that maintain, how do you see that momentum continuing throughout the course of this year?
Well, thank you very much, Matthew. It's a pleasure to be here with you, and it's a pleasure to see all of the faces of old and new friends, and possibly the number of people in the room today is a reflection of the level of capital market activity and the level of IPO activity that we've been seeing. And just so we can put it in terms of numbers, last year was indeed a record year for the capital markets of Saudi Arabia. It was a record year in terms of the number of IPOs. We had 49 listings, which includes listings in the main market, listings in Numu, listings in the direct listing route, as well as listings of other investment products. But it was also a record year in terms of the amount of capital raised. Last year, the capital markets also raised about 40 billion riyals of equity capital, and that is actually the highest number that was raised in any single year, barring the year of the listing of Saudi Aramco. Now, that level of activity has indeed put Saudi Arabia on the map. And if we actually take a little bit of a step back, in the first 6 months of 2022, Saudi Arabia was the 4th largest market in the world in terms of amount of equity capital raised, 4th only to China, India, and Korea. And this is very, very new territory for Saudi Arabia and the Saudi capital markets to be in terms of both the size, the vibrance of the capital markets, and its role in the overall economy. Now, if we project forward, I think the most visible signs that we can look at is actual deal flow. And the first data point that we can look at is deals that have already been approved for listing by the CMA that have yet to complete their IPO and their listing process. And today there are 23 of those companies that are still essentially on the runway, waiting for the appropriate time, and obviously market conditions notwithstanding. The second line of forecast is the files that we have in the CMA that we're currently reviewing. And today we have roughly 77 files. Again, these are companies that are applying for listing in the main market, for the Numu market, in direct listing, and this gives us another horizon of potential activities in IPOs. And then we have the third horizon. And the third horizon is a periodic survey we do of the investment community, of financial intermediaries, and we look at the number of mandates they have signed. And today we are aware of roughly 70 signed mandates of financial intermediaries and financial advisors, and that gives us an indication of the third horizon. Either these are just starting preparations before applying to the CMA. So if you look at this in tandem, it gives us an indication that we have still a very, very healthy pipeline. Obviously, all of this is contingent on market forces and economic forces as well.
Yeah. So that's like 170 listings in various stages of the process. So that's a huge pipeline of deals coming through, and something, well, I'm sure that this is what's attracting all of these people into this room this morning. Do you see, I guess one of the big things that, I think we talked about on this panel last year was the order books that the IPOs are getting. You said that the CMA was going to be taking action to try to make sure that the bids coming through were real money bids rather than people trying to inflate to get allocations. How do you see that sort of order book? Is there still some inflation going on in that, or is that now being curtailed?
Well, Matthew, if I can just comment on the point you mentioned on summarizing all of the numbers. You mentioned something like 170. There is a significant qualifier I'd like to make, is that in spite of the larger number of listings and the larger number of applications, we've also been seeing a larger number of rejections. The CMA has, for the first time, started to actually reject files that do not meet disclosure and governance standards. So our expectation is that this rejection trend is likely to continue, possibly even increase, as the number of files that may not necessarily be ready to fulfill disclosure and governance standards going forward, as well as some of them may actually pull their files anywhere throughout the process. Now, if we shift to your point on liquidity, I would say we were concerned last year, and the main concern that we had is that the volume of applications on listings didn't necessarily signify bona fide interest of investors. So late last year, we actually issued a modification to the book building regulations, which placed more emphasis and more responsibility on financial intermediaries to make sure that these orders reflect bona fide demand. And we have actually seen numbers decrease as a result to numbers that are more reasonable and more commensurate with bona fide demand. We still think that not all numbers reflect bona fide demand, but our expectation is that as market matures and as people understand the mechanics of the IPO allocation process, that actually starts to normalize. And we're seeing this as a continuous trend. What gives us confidence on the issue of liquidity overall, in spite of this decreasing level of coverage, is the rate of foreign investor participation. Because if you recall, Matthew, we talked about in 2022, we had 40 billion riyals raised of capital. In 2022, purely coincidentally, we had 43 billion of net foreign inflows of foreign investors into Saudi Arabia, which was also the second highest year of foreign inflows since opening up the Saudi market and admission into global indices, which was the highest number in 2019. Which actually means if you sum the two together, we actually had more liquidity coming in as a result of foreign flows than we had capital being raised through all of the offerings combined.
Yeah. And do you have a sense how big a portion of the market now are foreign investors?
Oh, yes. So today, foreign investors represent slightly less than 15% of free float, but we're continuing to see a rapid increase in the proportion of foreign investors, both in terms of the percentage of ownership as well as the percentage of trading and velocity. And this is actually driven by a couple of things. One, we talked about the IPOs. We do see much more interest of foreign investors in IPOs than we see in the overall market. So IPO activity is actually a main driver for foreign interest and foreign investment activity. The second is actually a circular argument of the increasing free float, because as the free float in Saudi Arabia increases, and throughout last year we saw the free float in Saudi Arabia increase from roughly 17% to 19%, the increase in free float actually increases your weighting in global indices, which also drives foreign investor participation. And then the last component that we saw actually had a significant impact on driving foreign investor interest is a reallocation of global indices, particularly in 2022 when we saw global indices reallocate some of their indices and take countries out, as well as rebalance with the remaining countries. That resulted in higher weighting for a market like Saudi Arabia. And just to put it into context, in 2019, when Saudi was first admitted into global indices, we were roughly about 2.5%, 3% of emerging market indices. Today, on some indices, we're closer to about 5%.
Okay. And what's, in terms of that process then of attracting foreign flows, I mean, are you happy with the level that they're at? Is there more that you're planning to do to attract foreign money in? And for the investors that are here, what sort of feedback are you getting from them on the rule book and on the ease of access?
So on the equity market, the feedback continues to be quite positive, but our expectation is that positive is never good enough. So I think we will need to continue to deregulate, improve regulations, and make the market more accessible. And actually, the most recent iteration of this was a modification we just announced recently on the rule book for foreign investors to actually deregulate it even further and make the process even simpler for investors. And the main change in the latest modification of the rule book is to, rather than saying investors are not allowed and here are the asset classes or categories that they are allowed in exceptionally, actually the rule book's structure has now changed to say the default is foreign investors are allowed to invest in all asset classes, and here are the asset classes or categories that have certain conditions or exemptions. So the change in approach to say we are actually increasingly open to foreign investors across all asset classes has been a very, very positive one in terms of reception. The thing that most investors, particularly international investors, have viewed positively in Saudi Arabia is the quality of governance and the quality of the disclosures. And this is not just foreign investors that have been remarking on this. Most global benchmarks and global rankings today rank Saudi Arabia either in the top 5 or top 3 in the world in terms of the quality of corporate governance and the quality of investor protection. And that is indeed a very important vote of confidence for Saudi Arabia as we continue to open up the market and attract foreign capital.
Yeah, and I think one of the interesting things, I guess, that we've had occur last year was the Americana dual listing, and there's obviously been a few other companies that have said in the press and on record that they are looking at international companies looking at a dual listing into Saudi Arabia. From the regulatory perspective, can you sort of tell us how did the Americana process go? What were the lessons learned from it? And how does that sort of smooth the way for you becoming a market which will attract listings from outside of Saudi Arabia?
Well, Matthew, I mean, if we take a little bit of a step back, Saudi Arabia has always been a very large, very liquid, very diverse market. But until quite recently, we were essentially a local market. We were a market that catered for local investors, local intermediaries, and local issuers. And I think there was a very strong aspiration for the Saudi capital market to outgrow its geographic boundaries and to become the main market that serves the entire region and hopefully one of the most important markets in the world. And we were only going to achieve this by deregulating investor access, which we talked about previously, which resulted in a lot of investor flows, but then subsequently deregulating issuer access for the first time to allow foreign issuers to access the Saudi capital market and to benefit from raising capital in the Saudi capital market. And our belief is that this not only serves Saudi Arabia and the Saudi capital market, but it serves the entire region, the region in its entirety, because most regions and most companies across the region have essentially the same needs. They need to raise capital, they need to raise it with lower cost of funding, they need liquidity, they need price discovery, and this market can offer it not only for companies here, but for companies across the region. And that journey of deregulating issuer access started in 2017 when we created the first framework for dual listing, which continues to be in place today. The major change that happened in last year in 2022 is we started to expand this framework for the first time to allow dual listings with offering or with capital raising. And Americana was the first example of this. Now, we have allowed this as a pilot phase, and we are continuing to entertain additional pilots, and we are seeing a lot of interest in terms of additional pilots that are forthcoming, because our expectation is that as we have a sufficient number of these pilots for dual listings, we are likely to create a regulatory framework that encompasses both these pilots and future companies that want to list. And even with the first pilot that we've seen with Americana, the regulatory regime is becoming increasingly clear. So for example, there are some rules that we are likely to apply even for foreign companies. These are things like the offering of securities regulations, the corporate governance code, the M&A regulations, because these are essentially pillars of being regulated and listed in the Saudi market, irrespective of your domicile. On the other hand, there are certain regulations that may not necessarily apply to you. And the most visible example of this is the Corporations Code, which is very, very localized, which may not necessarily apply if you're a foreign company. And it's essentially that learning process with a few more pilots that we're looking to enshrine in regulations very soon.
And can you give any sense of how many of these dual listings do you foresee happening over the next 12 months or so?
I think there are several discussions. Suffice it to say that this was a metric that we were late on until last year. we were actually very happy because with everything, with any new product, it is always most challenging to have the first pilot. When the first pilot emerged and when people started to see that pilot, I think we started to see a much more vibrant wave of applicants that are now very seriously exploring opportunities for dual listing.
Yeah. One of the other big themes that I think, just from a few discussions that I've had this morning already with people, I think one of the big challenges that there has been the issue of having the human capacity available to be able to take advantage of this huge glut of activity coming through. How do you, as the CMA, see your role both in sort of trying to boost that human capacity side of the business, and also within the CMA itself, get ready and get prepared for handling this huge wave of activity?
Well, Matthew, you are indeed correct. One of the biggest challenges that we face in the capital market ecosystem is one of building capacity and maintaining capacity. I actually was lucky to have a conversation this morning with Mr. Amin Nasser, and I was, I would say, pleasantly reassured that this is not a capital market problem. I think this is a problem for everyone that creates talent, builds talent, and trains talent. It is increasingly becoming more difficult to retain and maintain that talent. I think for the capital market, this is especially challenging given the tremendous growth that we're seeing in the capital market. And if we just put it into context, the profitability of all capital market institutions in the first 3 quarters of 2017 was slightly less than $1 billion riyals. The first 3 quarters of 2022 was closer to 4 billion riyals. So it's something like 4x the profitability. The same is true in terms of the number of capital market institutions. In 2017, we had roughly 80 capital market institutions. Today, we have closer to 120. So again, you have roughly a 50% growth. And the same is true with HR and the number of people who work in capital market institution. In 2017, it was roughly 4,500. Today, it's close to 5,500. So we had a 20% growth in a context where talent is becoming increasingly scarce. So it has been incumbent upon us to pay close attention to the issue of building capabilities. And I think the 3 lenses that we have looked at to try and emphasize the importance of building capabilities and maintaining capabilities, one is what we call fit and proper requirements. So we have been very active to lower official requirements to be licensed, and that explains the number of additional licensed players that are playing both in traditional and in fintech. But one area where we've been actually increasing the standard is in fit and proper requirements. And fit and proper requirements is essentially our assessment on whether the capital market institutions has sufficient people, sufficient talent, sufficient training to do the business that they are entrusted to do. And we are increasing the standards that we're applying when we license firms. We are also increasing the standards that we are looking at when we regulate firms, when we oversee firms, and when we inspect firms. And these are increasingly becoming not just absolute standards, but relative to the size of business that they're doing. So the more business you do, the more expectation is for you to have the right number of people, the right training of people, in order to cater for the business in a manner that you are entrusted to do. The second category of things that I think we've been focusing on is a requirement of continuous professional development. So very recently, we started to implement a CPD requirement of all financial intermediaries of no less than 16 hours a year in terms of professional training. We've been vigorously enforcing that requirement, and actually this year and in the coming years, we are likely to review that to see if we need to increase it even further to make sure that the level of training and development is commensurate with the growth that we're seeing in the industry. The third category of things that we've been focusing on, because all of these things relate to essentially a stick that a regulator uses to prod regulated firms, but we also recognize that you need a carrot. And the carrot is essentially the availability of training. And the flagship in that regard is the Financial Academy. and its level of activity, not just in the capital market, but across the financial system. And the Financial Academy only last year has launched a little over 900 training programs that have trained a little over 13,000 people across the financial sector. And this is 4 times as many programs and 4 times as many trainees as in the first year of the Academy, only in 2019. And it is worth noting in this regard that a lot of the capital market training is actually subsidized by the CMA in order to continue to encourage capital market institutions to invest in training. And I would like to actually use this platform to invite everyone to take a look at the training and development options that are available and the suitability for your staff, and actually to provide feedback to the Financial Academy to the extent that there are any gaps required in your training. And then last, but certainly not least, and this unfortunately takes me back to the stick, is we have been increasingly focused on making sure that firms have the requisite professional indemnity insurance. Because if there is any inappropriate activity or inappropriate level of capability that results in breaches, we want to make sure that firms are able to take the liability and the financial liability associated with this. And we are actually reviewing the professional indemnity insurance requirement this year to see if there may be a requirement to increase the level of standard.
I know it's an interesting point there, because, I mean, along with all of this huge swell of activity, all the new companies which are coming in, all of the new investors, I mean, it also goes back to your other role of making sure the market functions properly, and the financial industry is not unknown to have the occasional scandal. So, as a regulator, how do you see the CMA's role now as overseeing the market and protecting investors?
Well, unfortunately, Matthew, the bigger the market is, the flip side is always the bigger the risks are, both for the system and also for investors, and the bigger the incentive for people to cheat. So it is incumbent upon us, in parallel with facilitating new entrants in the market, facilitating IPOs, streamlining the process, to make sure that there are adequate provisions to protect investors and to penalize people who do not respect the regulations. And we have actually been thinking about investor protection across 3, let's call it distinct layers or gates. The first gate is prevention, because the first way to protect investors is to prevent bad things from happening. And our biggest tools around prevention are around governance and disclosures. If we can ensure that corporations wanting to list or listed apply the highest level of disclosure and governance, actually the markets become efficient, and then investors are left to make their own choices. We are increasingly encouraged, as I talked about in the previous point, to not approve and to reject companies that don't meet these standards. And I don't think we would be surprised that we would even delist companies or suspend companies from trading if they don't respect disclosure and governance standards. I think that takes us to the second layer of investor protection, which is actually a lot of the people who are sitting here today, which is intermediation. So it's capital intermediaries. So it is no secret that the CMA is now placing more emphasis on capital intermediaries and giving them more room to play their role as trusted advisors and as trusted gatekeepers for the capital market. But that increased room comes with a lot more responsibility. And that responsibility requires, as I discussed, to have the right training, the right capabilities. It requires to have the right level of insurance. And to the extent that you don't have either of them, I think you should expect to have a significantly higher approach in terms of the scope of penalties. And if I can just put it into context, the CMA has levied something like 30 million riyals of penalties just on capital market institutions in the past 5 years. But what's more interesting is that roughly 90% of those penalties were just in the last 2 years. So this gives you an indication of the pace of strictness in terms of the level of penalties if we see breaches by capital market intermediaries. And then last, but certainly not least, in addition to prevention and intermediation, is resolution. So to the extent that there is a breach, we need to make sure that we have the right mechanisms to make things whole, and that comes from having very, very strong penalties. The capital market law in 2019, we modified to significantly increase the level of penalties. The highest fine used to be 100,000 riyals. Now it is 25 million riyals. The highest amount of disgorgement of proceeds was one time the proceeds. Now we can disgorge up to 3 times proceeds. So penalties can be quite painful if they occur as a result of breach. But equally painful is the ability for private, aggrieved investors to gain recourse and to gain compensation. And the most active growth that we've seen in the last few years is the buildup of this compensatory system. And just to put it into context, last year only, we had a record number of compensatory damages. I think it was something like 1.75 billion riyals paid to damaged investors, and every year is roughly 4x the year prior. So these are essentially the mechanisms that we'd like to ensure are in place to protect investors.
Yeah. So you're essentially giving more freedom in a way to all of the authorized parties in terms of their not having to come to you quite so much, but at the same time having a bigger stick for the times when they do cross the line.
They usually say with great power comes great responsibility. And the folks in the audience today of capital market intermediaries have increasingly great power, and accordance with it, they have great responsibility.
Yeah. One of the other big products, of course, that the government is trying to develop is on the debt market as well, and I guess it would be remiss of us not to cover that briefly as well. So what do you have planned in terms of developing the debt capital market side?
Well, so everything we talked about to date was largely focused on the equity capital market. But if we are actually going to project to the future, if you ask me what is the area that we expect to see the biggest growth in terms of the level of activity and the level of development, it is actually in the debt capital market. And we are seeing this most visibly in the level of interest by issuers, both in terms of the number of issuers, the size of the issuers, and the diversity of the issuers. One of the most interesting signals that we see is that even some issuers that used to pursue debt issuance outside of Saudi Arabia are now pursuing mostly issuances inside of Saudi Arabia. But we're also seeing a lot more interest on the investor side. And this has largely been a function of the increasing interest rate environment, where debt capital market is now increasingly looked at as a viable asset class. And this is creating a much wider category of investors. I think one of the most notable developments that we are expecting in this regard is the work that we're doing jointly with our colleagues in the Zakat and Customs Authority to revisit the Zakat implications for investors in debt securities, particularly institutional investors, because our expectation is that as we offer a more attractive and more reasonable Zakat treatment, we are likely to see a much wider universe of institutional local investors come into the market of DCM, therefore creating or continuing the cycle of growth.
Yeah. And how do you see, I guess the rate environment is creating a more interesting dynamic, because if you are an investor, all of a sudden you can get a 5% plus return on a fixed deposit locally. Is that sort of shifting how investors are thinking about allocations between equity and debt, and is that sort of helping as you look to develop the debt market?
So very much, Matthew. So if we look at, for example, the increasing interest rate environment that we've going through since the second half of last year until the beginning of this year, it actually had multiple effects on the capital market. The most visible is the effect on liquidity. So obviously and quite naturally, with increasing interest rates, you actually see an inverse relationship in terms of a reduction in liquidity, and this is felt both in the system overall, but also more visibly in the capital market, where you see a reduction in trading activity. Now, obviously, this has a cascading impact on valuations, particularly if you are more of a growth-oriented company with cash flows that are projected far into the future. This is likely to have an implication. We also saw that it had an implication on the asset management industry. So the asset management industry in Saudi Arabia peaked in terms of AUMs, or assets under management, of around 820 billion. As a result of the increasing interest rate cycle, we saw assets under management decrease to roughly 750 billion. So roughly a decrease of about 7% from its peak. But what was more interesting wasn't the decrease, because the decrease, A, wasn't large, and B, was a function of both decrease in the asset values themselves, in addition to some withdrawals. What was more interesting is to see the change in composition of that AUM. So, for example, the most significant decrease in terms of AUM was actually from money market funds. And the reason generally is that many investors, as a result of the increasing interest rate environment, are actually looking for other alternatives other than money market funds to park their money, whether these are direct deposits or indeed, as you've mentioned, fixed income securities, which are increasingly becoming a viable option. And that is one area where we're actually seeing growth in terms of AUMs and level of activity.
Well, I think, unfortunately, we will have to end there and let the next session get up. But thank you very much, Your Excellency, for your time. Please show your appreciation to His Excellency Mohammed Al Grace, and welcome Richard Banks for the next panel. Thank you.
Thank you, Your Excellency and Matthew, for such an informative and interesting panel. And however, we can't progress or move forward without looking back and recognizing how our past led to where we are today. The progression of Saudi Arabia's capital market has been one to watch, to now housing one of the world's largest stock exchange and several of the world's top financial services companies. The Saudi capital market has established its presence on the global stage. The next panel, moderated by Richard Banks, will delve into the development of the Saudi capital market, examining the development of its past and exploring further avenues for growth. He's joined on stage by Engineer Khalid Al-Hassan, CEO of Saudi Tadawul Group, and Mr. Wasim Al-Khatib, CEO of Lazard's Middle East and North Africa Investment Banking, and Mr. Patrick George, Head of Markets and Securities Services for Europe and North America at HSBC, and Mr. Ken Robbins, Chairman of EMEA Equity Capital Markets for Citi, and Mr. Khalid Al-Ghamdi, CEO of ANB Capital. Welcome all. I pass the mic to you, Richard.
Thank you. Right. Thank you. Thank you very much. Good morning, everybody. It's a huge personal pleasure to be back on a stage in Riyadh with so many friends and colleagues. Thank you, Your Excellency, for your usual tour de force of a live and unscripted interview. And thank you to Sarah, who opened this event with customary eloquence. I should just say that it's a long time since I first came to Saudi Arabia, more than 20 years, and I came at the invitation of Sarah's father, Jamaz, who was a great friend and a great man. And it's wonderful to see how that tradition is continuing, and I know he would be incredibly impressed with everything that we're doing today. So we have 40 minutes or thereabouts to discuss quite a large number of topics and a big question. The topic of this panel is, with the Saudi capital market's vast developments over the past decade, how can pockets of future development be unveiled? So before I start asking my wonderful panelists to unveil pockets, I want to ask Khalid to a personal question, because we saw in that film at the beginning, we saw some of the milestones that have taken place over the last 10 years. And you and I have been working on this for a very long time. And I wanted to get your personal view on what you think are the most important milestones that Tadawul, that the group and the exchange and Saudi have achieved over the past decade or so.
Thank you, Richard. Assalamu alaikum. Good morning, everyone. I'll take this opportunity first to thank everyone for coming. It's our honor to have this gathering. I think Saudi Tadawul Group facilitating this event is just for bringing everybody in this capital market together and discussing very important topics, especially focusing on the future. So back to your point, Richard, what was the most important achievement for this market? I think with the so many achievements that the capital market has done over the course of the last 5 years, it's very hard to pick one. Actually, we always claim that we are still in the beginning of these achievements. I think what has proven in the last 5 years, this capital market has a great potential. This country has a great potential. The capital market, with all of the stakeholders within the capital market, is capable of delivering big achievements. I think with His Excellency mentioning some of the statistics, as well as Sarah in her speech, significant changes since this market has been open, moving from being local to being an integrated capital market with the region, the global investment community. So the fundamentals, the infrastructural changes, the regulatory changes has taken place, and I think this is not the end of it. It continue to be in the right track, so we know exactly how to flip things from a place to another. Most important today, if you would ask me what is the most ambitious targets for us as a capital market, I would say 2 things. Of course, what has been mentioned in the video, His Royal Highness vision of creating the Saudi capital market as one of the top exchanges in the world. So this is a significant milestone. We know we can, with everybody contribution to this event. And the second, I would say, objective for us going forward is to create Riyadh as one of the global hubs. I think Riyadh, Saudi Arabia, the Saudi capital market have the position today with all macro and micro level fundamentals to create a Middle East global hub for financial investments, bridging East and West as well. And as we go, this will continue to be our ambitious objectives and plans.
I think the word ambition is going to be used multiple times this morning. It already has, and we applaud that. Let's move on. We'll come back to some of those specifics as we go through the panel. But Wasim, I want to come to you and indeed the other panelists, because I think, as was mentioned in Sarah's speech earlier on, Saudi capital markets don't exist in isolation. They're part of the global capital market infrastructure. And global capital markets in 2022 had a pretty difficult year. There is now a lot of talk that with the rising rate environment, which His Excellency referenced, and a rotation from growth to value, that we're at some sort of fork in the road or a turning point. So Wasim, to you first, where do you think we are in the global capital markets journey, and what does that mean for Saudi Arabia? And then I'll come to the others for that question.
Absolutely. Thank you very much, Richard. So in 2022, what we saw is continued migration of capital from the international investor community into the region and specifically on the Tadawul Stock Exchange. If I'm not mistaken, the latest statistics show that I think around 43 billion riyals migrated into the market, and that's really underpinned by many factors. In addition to the global inflationary environment and also the cascading effects of the Ukraine and the invasion of Ukraine and the recycling of capital and rotation out of certain sectors and into safer regions, Tadawul was ultimately a very big winner. But what that says is that the exchange itself was actually a very ready platform to be a safe host and recipient of those proceeds and investors coming into the market. Needless to say, as bankers, we like to look at the numbers and the data. What we have to think about here is that the Saudi capital markets is a reflection of a very strong G20 economy and has over 200 to 250 listed companies. And if you look at across the 20 sectors you see on the exchange, there are very strong and attractive opportunities for local and international investors to benefit from the deep liquidity as well as the strong fundamentals of those sectors. And that becomes a very easy conversation to explain to investors that it is not just about them parking their capital in a safe region, but there are also very attractive commercial opportunities. When you look at the Saudi pipeline IPO, which was mentioned by His Excellency the Chairman and also the Chairperson of Saudi Stock Exchange and Khalid, we had one of the most impressive years in 2022. And if you look at the sectors of those companies, they're actually very quite diverse. So they cater to all asset managers, different fund managers covering emerging markets or technology or retail or oil and gas and petrochemicals. So I think the market is very ripe to continue to be a very prominent recipient hub of international flows.
Wasim, thank you. Patrick, giving us the benefit of your global perspective, because of course you have a remit that covers Europe and North America, but I'm sure you understand what's going on in Asia as well. Where is the world now? There was a huge migration towards private markets over the past decade. Ultra-low rates have facilitated speculation. What's changed and what will change as far as you are concerned globally?
So, sure, thank you. 2022 was definitely probably one of the most eventful years for capital market, probably since the financial crisis in 2008. We had to deal with the war in Ukraine. We had to deal with the fastest increase in interest rates we've seen in more than a decade. We had to deal with the second largest economy in the world, China, still operating in a lockdown mode. In October or September, we had to deal with a monetary situation in the UK, which could have led to another financial crisis.
Just speak a little closer.
To another financial crisis. So 2022 was probably, the mood was very gloom, for sure, and I would say it's reflected in the performance of capital market. We started 2023 with actually a complete reverse, and it took the market by surprise. Everyone was very negative, everyone was very underweight and short, and the 180-degree shift in policy in China has definitely helped change the sentiment. We're currently in a kind of environment where we're trying to price this complex macro equation, where we have a structural inflation, which is true, is capping, a very shortage of labor across developed market, and some question mark regarding whether we're heading towards recession or not, or soft landing. It's very difficult to price, but the mood has definitely turned positive. I think the resilience of the Saudi capital market have been shown in the performance, definitely. Maybe the situation in Russia has definitely helped, but I would say it's not just exclusive to the exclusion of Russia from the MSCI. I think what we've seen since 2016 has definitely helped. The timing was perfect to see the evolution of the Saudi capital market. It was a combination of many things.
Okay, thank you. Ken, globally, are we seeing a migration back to public markets away from private markets? Are we seeing a new interpretation of risk? Is inflation transitory? Give us the high-level view on that.
Well, good morning, everyone. So look, I think that investors had to face a very significant adjustment in 2022 to a new world of money no longer being free. That adjustment has largely occurred. As Patrick just said, we are seeing investors back in the primary and secondary markets in Europe and the US. And we anticipate that cautiously and tentatively, we'll see the reopening of IPO markets in Europe. We're starting to see, when I say Europe, I mean the EU, we're starting to see a couple of transactions in Europe. And there is a reasonable pipeline of deals which I think will come to market in the second half of this year. In the US, it's a bit slower. I think that's principally because most of the companies which want to access the capital markets are growth companies, and that is clearly still the most challenged part of the capital markets, given the cost of money today and the impact on valuations. But I think in the latter part of the second quarter and in the second half of the year, we will start to see a reopening of US capital markets in IPOs at reasonable valuations, certainly probably favoring the buyer rather than the seller in the first wave of transactions. So I think for the region here, and in 2022, for great reasons, which we've gone through, we were pretty much the only game in town. Investors internationally, and I think this is probably why this room is so full, we're very, very focused on this region. You've got the better macro on a relative basis in terms of growth, lower inflation, and didn't face the same challenges with the high energy prices that were faced in the EU, the UK, and the US. So I think there'll be more competition in terms of public market activity as we go into the second half of this year, but investors will still be very interested in transactions out of Saudi and the GCC as we go through the balance of the year.
Do you think that is a longer-term trend? I mean, there is an argument, which I think has substance, that the last decade, because of low rates, has seen a rotation of geographic allocation into developed markets, into growth, US growth, European growth, companies, not places. And now this, the turn in inflation, the turn in rates, as they say, 4 is the new 2 in terms of inflation, has meant that there's a rotation towards growth markets, meaning places like Saudi Arabia, and that is a trade now that will continue for a number of years. Do you see this as what happened last year as just the market being the market, or is it indicative of a structural shift in where investors want to deploy capital?
I think there's two parts. There's a structural shift going on, just in terms of the number of investor dollars which can come into this region, and the potential for growth and size of the equity market here, which obviously we saw very much so during 2022. So I think A, it's structural, B, it's about relative macro. In terms of the macro here in Saudi and the rest of the GCC versus what we're like to see rolling recessions throughout the EU, the UK, and the US through the course of 23, maybe even into 24. So I think it's twofold: one, structural, and two, just a function of a temporary differential in the macro.
Ken, thank you. Khaled, I want to come to you now. Picking up that theme, if you listen to the narrative this morning, it would seem that Saudi is taking a course that is independent of all the changes that have happened in the rest of the world. His Excellency touched on a couple of areas where things might be different, but is Saudi different? Is Saudi unique? And if so, how long can that go on before it converges with what's happening elsewhere?
Okay, first of all, thank you very much, Richard, for the introduction, and thank you to the Saudi Stock Exchange for giving me the opportunity to be here today. I'm extremely privileged. I think that the Saudi capital market ecosystem has continued to evolve, particularly over the last few years, in various areas, including in terms of infrastructure and also more conducive regulations. But I think that we all need to recognize that organic innovation and development in any industry, whether it be in banking or retail or tourism, really happens because of competition. It is competition that ignites development. And in the capital markets, it's no different. So with that said, I think that one of the key ingredients that will accelerate the development of the Saudi capital markets is by introducing competition at the exchange level. So with that said, for a very long time, the capital markets law granted Tadawul an effective monopoly as an exchange operator. But with the recent revisions of the law, we have had some very important changes that have been introduced that relax this position of privilege. And I believe that these amended provisions of the law have largely been overlooked by the market, and I think that CMIs and issuers would welcome competition in this area. From my perspective, given the kingdom's more progressive and open economic demeanor, I believe that increased competition at the exchange level will deliver significant improvements at par with global markets. Take, for example, the National Stock Exchange in India challenging the monopoly of the Bombay Stock Exchange, or the Chi-X challenging the Australian Securities Exchange, or the ISE challenging the Chicago Board of Options Exchange in the US in the early 2000s. Competition in these markets catalyzed significant improvements in market conditions, including improved access to capital, more diversified product offerings, lower trading fees, and improved technologies. And I honestly believe that we should not make ourselves immune to these possible benefits.
Thank you, Khalid. I can always rely on you to throw down an interesting gauntlet. So I'm going to have to come to you, Khalid, and say, competition? What do you feel about that?
Well, I think coming from the capital market side, competition is happening every day for us. I think competition doesn't need to be only locally. Competition is happening regionally and globally, and this is exactly what we are doing. And to His Excellency point, when we talk about competing, of attracting a new investment to the country, the cross-listing of issuers. So I do agree on the competition, that it is important. It will elevate the developments, the services, but I do believe that competition is happening. And since we open up the market, and I assure you, this is one of the key pressures that we have, is how do we position the Saudi capital market well, regionally and globally, with the full diversified offering to attract investors as well as market participants and issuers.
So how do you benchmark the Saudi market against other markets, against global, regional and global competition? You know, what are the characteristics of this market now and in the future that are going to give, and I'm not even going to say Tadawul, I'm going to say the Saudi capital market, a competitive advantage over other capital markets?
Well, I think we are in a very unique position. So we are classified by international benchmark as an emerging market. But looking at our size today, both at the capital market as the economy, we are compared to several elements of developed market. So you could look at it from a privileged or a challenge to the benchmark you do. So the way we look at this is depend on the services and product that we offer. But the most important, whenever we introduce a product, we look at both. We look at emerging market, we look at regional market, we look at the global market. But as far as the standard sets, because of the market intermediates that we deal with, whether they are local or international investment banks, we know the pressure that they might have from their clients on the standards we apply. And if you look at the benchmark, when we looked at, for example, post-trade in the last few years, and we reactivated Muqasa and the new look for IDA as well, we looked at this from a global developed market setup in the regulations as well as in the operating platform, because that fulfill the objective and the strategy to attract more players to the market, whether these are financial intermediaries or investors. So we always look at both. It depends on what we offer, but we always want to satisfy local, regional, and global clients that we have directly, or the financial intermediaries and our members would have.
Thank you. So let's move on to looking at some elements of the what is an overused word, the capital market ecosystem. Khalid, I'm going to come to you and then to the others. We're going to hear a lot today, and we have heard a lot about the ambitions for the Saudi capital market to be a global market. And to do that, it needs a number of things. It needs pools of capital. It needs a suitable ecosystem. So what, in your opinion, are important steps that this market needs to take in order to develop the next part of the ecosystem that would make it a truly global market rather than simply a very powerful local and regional one?
Are you asking me that question?
I'm asking you.
Okay. Okay. Well, I think His Excellency touched, the Chairman of the Capital Markets Authority touched on a very important aspect, which is basically training, and he also touched on corporate governance. I think that when we talk about pockets of further development in the kingdom, we can't ignore corporate governance. We've seen catastrophes worldwide because of a lack of corporate governance. We've all heard about the FTX in the US. So I think that basically what we need to do here in the kingdom is try and foster a more competitive corporate governance movement, if you wish. So today we have more than 1,000 board members who operate across different industries on the Saudi Stock Exchange. I believe that there is room for the Capital Markets Authority to consider establishing a board member accreditation or certification program, one that can be optional, to provide a threshold level of education to current and prospective board members about the corporate governance regulations, about their roles and responsibilities as board members, and also about their overall liabilities. I think that with that, companies would play or would help them act in the best interests of their shareholders, their customers, their key employees, as well as their stakeholders. Now, how can this be done? And this is just an idea. How you foster a more competitive corporate governance movement. In other words, by rewarding rather than by penalizing. So let's just say that a company whose full set of board members achieve accreditation, then that company would basically receive a blue tick against its company's ticker, a pre-Elon Musk, if you wish, blue tick. And what that blue tick would signal is that they're basically bona fide, but at the same time it would differentiate them from all the other companies who do not have a blue tick. And what would motivate them to have that blue tick? Well, one, it enhances the trust that the company has with its stakeholders. Two, it potentially enhances the liquidity on the company's shares. It potentially enhances access to government contracts and access to capital. But it also creates a competitive tension where there might be more and more companies that would want to achieve this blue tick. So And probably this would be a great revenue generator for the regulator, to be honest with you. And I also believe that there is room to establish a capital market academy that is overseen by the CMA and that is jointly sponsored by the CMA, by Tadawul, by CMIs and listed companies as part of their corporate social responsibility. And the primary role of the academy would be to continue to advance the levels of education and accreditation to market participants ranging from board members and senior executives all the way down to investors. I think this would add tremendous value to our capital market ecosystem and would also enhance the corporate social responsibility of market participants.
Okay,
and among the other benefits, think about how valuable this would be in preparing companies on the Numu market to graduate into the main market.
Thank you, Khaled. You know your audience. I want to turn to our international investment bankers here, each representative of a storied and important investment bank. So what that means, Wasim, going to come to you first. As an investment banker, involved both in primary markets, M&A, all that type of thing, what do you think is necessary to take the market to the next step? I mean, is it a question of a deeper institutional investor base? Is it a market for corporate control? Is it a debt market? Where do you see that this country must go in order to get to the destination of its ambition?
I think it's a combination of everything you said, but what I would do is maybe step out a little bit and look at what the economy needs from financial services and the capital markets. When you look at the history, and you know, as west as the US and then as east as China and Singapore and Hong Kong, what you see is that any nation that's embarking on an ambitious transformation plan that requires a lot of funding for infrastructure projects and activating new sectors, financial services sector and the capital markets are an integral part and enabling point for these things to happen. So I think the first thing that needs to happen here is that there's a responsibility on everybody in the sector to continue deepening the capabilities and the services and the sophistication as well as the creativity to tap into the right funding solutions and structures that would make it efficient and commercially attractive for those mega projects and new sector activations to be commercially viable. So under the Financial Sector Development Program, which is really the mothership of the entire ecosystem when it comes to the sector, 2 out of the 3 key objectives, one is to have a very vibrant and strong capital formation hub in the kingdom. And the second one is to ensure that financial services sector is capable of supporting the growth of the private sector growth going forward. So if you look at that entire umbrella, there's really a lot of work to be done, and that's really underpinned by what the financial services players, including the investors, can bring to the table, and the exchange and the regulator have already paved the way for these things to happen and flourish.
Yeah, some very good points. Patrick, please.
Look, it's for me, the ambition for the kingdom are so big that we will need more than one conduit to be able to deliver that growth. And the capital market evolution is on track and it's ongoing and it's a marathon. And we have developed obviously the stock market throughout the last 5 years, but we will need different conduit. And I think the next step will be probably the evolution of the debt capital market. We're seeing that it has started. It is definitely driven by government borrowing, and we've seen some corporate, but we need to take it to the next level, bring back the foreign investor into the local debt market, and I think that would be a second conduit for the growth.
Is that real-denominated debt, or I mean, is it a real market, as well as a dollar market?
Yes, definitely. I think the ambition and what you are planning to do for the kingdom definitely warrant several conduits, local, international, dual listing. We should go for everything.
Which should we prioritize? Or do we do it all at once?
And I say we together, because we are together in this journey.
Yeah. But I mean, would you prioritize the development of the local debt market as the first step? I mean, what sort of, because presumably the people that would use that market would be local corporates. You're not going to have an international borrower borrowing in Riyal to start with. So you've got to sort of get that debt market, get that yield curve, get that liquidity, and then you could see, an international issuer saying, hey, yeah, I can tap this market and swap it back into dollars or euros. What would be the first step that should be taken to catalyze that?
What we're currently seeing, and from what I understand, is a development of the local debt capital market. The more this is stable, and the more the kingdom is stable macroeconomically, which it is, and is diversifying its economy, we will see the foreign investors coming in the debt capital market. They will be buying denominated real debt. There is absolutely no problem with that. And obviously some US dollar debt is also, or euro denominated debt could be welcome too. But I see this as an evolution. It is something we should start planning in the same way we started with the stock, working on it, in the same way we worked on the stock market a few years ago.
Okay, thanks. Ken, I know you're an equity guy, so I'm going to flip from Patrick's talking about the debt market to you talking about equity markets. We hear a lot about IPOs. Now, IPOs are the sort of rock stars of the equity capital markets, but there's a lot more to equity capital markets than just IPOs. They are important, but they're not the only thing. So where should the focus be, in your opinion, on building out a deeper ecosystem within ECM?
Sure. So I think as has been well recognized in the IPO transactions which have occurred to date, and the very significant pipeline is testament to the reform and what's been built here in Saudi Arabia in terms of the equity capital market. I think there is actually one challenge in terms of IPOs for international investors, which is just worth discussing before we move on to follow-on offerings, and because they are related. And we heard earlier that 15% of the local market is owned by international investors, which is obviously terrific, but it's also, I think, on the low side versus the amount of capital which this region does attract. And one frustration we have heard from international investors, some of the biggest global long-only mutual funds, pension funds, and some of the most active investors in the market, are their frustration around relatively low allocations in IPOs. And of course, they are running very significant pools of money, and a low allocation can be relatively trivial in the context of their portfolios. And I think that's a consequence of two things. Obviously, it's a consequence of a very strong bid here domestically for IPOs, but also, and we heard this earlier, some of the issues around inflation of domestic orders, effectively meaning that their orders look weaker when they're perhaps more reflective of their true demand for an offering. So allocations have been low, and that's been a frustration for international investors. It's probably limited the amount of capital, because an IPO is a very easy way of building a position quickly in the domestic market. It also, and this is I think the second point, it does make it more challenging for accelerated book builds, i.e. overnight, quick to market transactions, because that group of international investors are very familiar with that process. They're used to a wall crossing, they're used to maintaining 100% confidentiality, they're used to being able to make a decision very quickly on order size and price in an overnight book build. And the fact that from some company corporate registers they are absent or small means that it's actually quite challenging to, in this current situation we find ourselves in, to execute large accelerated offerings efficiently in this market. So I think that's one thing which needs to develop. We have obviously seen very successful accelerated offerings to date. We've seen, I think, one fully marketed offering for STC. I think there is more to do there in terms of developing transactions post-IPO in the market, and that would include things like convertible bonds, exchangeable bonds as well, where I think more work is required around some of the regulation, but also the ability to on-lend stock and short sell stock in this market is something which I think deserves further attention, as that market can develop quite significantly here, as we've seen in other markets.
So Khaled, and then I'm going to come to Wasim. We've got about 5 minutes left, and I'm getting indications from my organizers that I need to stick to time. But please do comment on what the others said. But how important is the development of the domestic institutional investor base? And is that something that Tadawul is involved with? You've got large investors in PIF, in Hassana, in Sama. But then there's a big sort of gap after that down to a more diversified local base. And foreign investors, and you and I have talked about this on stages here and all over the world, they like to see the locals. You know, they want to see local institutions. It gives them comfort. It encourages there to be transparency and research. And to me that, you know, yes, you do have institutional investors, but there are very few insurance companies. There's only one pension fund. So is it important that there is a greater depth and a greater breadth of institutional investors in the kingdom?
Absolutely, Richard. In general terms, I think from a strategic perspective, widen our investor base is a strategic pillar within the group and the capital market developments. And from a fact perspective, local institutional investors are the biggest owners of the market today. But that doesn't mean we don't need to continue to enhance and make the platform more attractive for their participations, whether through the market itself, the equity market, or either other form of investments. I think you touched based on the debt market. Debt market is another vehicle to attract local investors to participate in it. And I would say, taking this advantage of the discussion, we are very pleased of the debt market developments. I think the debt market development is a recent one. It started 2018 when the government moved all of the issuances to the capital market, continued the developments whether in the regulatory or operational side. We have seen significant activity happening last year with the significant increase in the number of trades and value traded in the market. And this to be continued. The IDA connectivity to Euroclear and Clearstream, as well as joining the international indices, FTSE and IHS. So back to your question is doing things on ESG, investor relation, investor awareness, sector, even diversification on the IPO that we get among the sectors will attract new set of local investors. So the focus is to look at local retail and institution, to look at regional as well as global investors at the same. I know we have been talking about international investors recently the most, but that's because the market has been recently open and we're watching that developments as a benchmark. But absolutely, several plans in our side as well as in the FSDB as well as in the CMA strategy to look at this very carefully. Sorry, Wasim, I took that.
No, absolutely. I think just a quick one, and I'll tie this up to the debt capital markets because it's an area of high interest to me personally. Look, on the equity capital market side, I think the institutional investors hold a big chunk of the market capitalization. So that gives you a very strong indication of that. But then when you look at the debt capital markets, I think currently it forms around 5% of the entire market. So there's a lot of room for growth as well in that domain. And what we have seen over the last few years is that the government and the government agencies have taken a leadership role to ensure that the rating exercise and transparency and best practice in governance is really out there. That started by the Ministry of Finance's National Debt Management Center, establishing the yield curve, putting out the credit rating, putting the first public disclosure document for the kingdom in the global map in 2016, and then same thing followed by Aramco and as well as the PIF most recently. What we need to focus on in the debt capital markets is to deepen the asset management and investor pool to provide more liquidity for those instruments. When you look at the global order book for dollar issuances, 50 to 80% of those come from asset managers and pensions. In the kingdom, when you look at the Saudi Riyal issuances, the majority of the book continues to come from commercial banks. So asset managers are much more dynamic and frequent in providing liquidity and trading. So therefore, we just need to probably put in and intensify our efforts to create Saudi Riyal denominated fixed income funds by local asset managers as well as international asset managers.
Thank you very much, Wasim. I think we're going to have to draw it to a close there because we're on a tight clock. We've touched the surface. We've started a number of conversations here which we're going to explore in much greater detail as the conference progresses over the next 2 days. So if you do have an interest, please do stick with us, because we will go into detail, including in the next few minutes. But before we do that, could you please join me in thanking my panelists for their wonderful job and for their comments this morning. Gentlemen, thank you. Ladies and gentlemen, if I can encourage you to take your seats, because in many ways, whilst what we've had has been fantastic, the best is yet to come. So I just see my next speaker is deep in conversation with his colleagues, so we'll give him a little moment. I've got his eye now. So if you could join me. Oh, what's he doing? Is he coming? No. Right, okay, so thank you. I just wanted to check that my next speaker was ready, and he very much is. So please join me in giving a very warm Saudi Tadawul welcome to engineer Amin Al-Nasser, who, as you, I hope, all know, is the President and Chief Executive Officer of Saudi Aramco. Engineer Amin.
بسم الله الرحمن الرحيم. Your Excellency Mohammed Al-Gwais, distinguished guest, good morning. I want to applaud the Saudi Tadawul Group for holding this timely forum, and also say thank you for the invitation to share my thoughts. Let me begin by stating the obvious. Capital markets are critical drivers of global economic development and crucial to business growth. And while the benefits of international capital markets clearly remain unchanged, the role of domestic capital market is becoming even more important in an increasingly fragmented world. What is also clear is that in some countries, capital market development is not receiving enough attention and therefore falling short of full potential. Here in the kingdom, that is not the case, as capital market development is high on the agenda under Vision 2030. The results speak for themselves. This is now one of the fastest growing capital markets in the world, benefiting from an economy that is the fastest growing among the G20. And the Saudi Stock Exchange now ranks among the top globally by market cap, with Aramco's listing being one contributing factor. Indeed, full credit goes to the Saudi government, the CMA, and the Tadawul Group for the tremendous job they have done. Also, a special thank you to His Excellency Mohammed Al-Jad'an, who is overseeing capital market transformation as chairman of the Financial Development Program. As far as the future of capital market is concerned, ESG is clearly a rising trend. And in my view, an increased emphasis on ESG is a move in the right direction. However, if ESG-driven policies are implemented with an automatic bias against any and all conventional energy projects, the resulting underinvestment will have serious implications for the global economy, for energy affordability, and for energy security. Unfortunately, that is exactly what is already happening. The cost of capital for oil and gas projects has risen due to a higher perceived risk, and capital scarcity is a common phenomenon driven by ESG. This leads me to a core issue I want to bring to your attention: the global energy transition and how capital market participants perceive it. Historically, capital markets have played a crucial role in the development of the oil, gas, and chemical sectors. In turn, these sectors have offered fairly healthy returns. And while the energy industry is obviously cyclical, it continues to offer very solid returns. Yet, investment in oil and gas has fallen sharply. Upstream investment in 2022 was around $400 billion, less than half of the peak in 2014. The primary reason: pressure from multiple directions to discontinue all new investment in oil and gas. Pressure based on what I strongly believe are flawed assumptions and arguments. Proponents of the popular energy transition narrative paint a picture of a utopian world where alternatives are ready to replace oil and gas almost overnight. Likewise, they assume the massive global energy system, including less than reliable electric grids in many developing countries, can be transformed instantly. Unfortunately, too many participants in capital market are believing this rhetoric rather than seeing the reality. As the energy crisis in Europe has demonstrated, alternatives are not ready to shoulder the heavy burden of global demand. Indeed, the world will continue to depend on oil and gas for the foreseeable future, particularly in sectors such as heavy transport, heavy industry, and power generation. From my perspective, for a less risky global energy transition, everyone, including capital markets, must take a more realistic view of how the global energy transition will unfold. Now, I know that for many of you, this is a tough ask. After all, decisions of investors as well as financial institutions are influenced by prevailing public sentiment. As such, the global energy transition presents some major challenges to capital markets, but also some significant opportunities. The opportunities are obvious given enormous amount of capital will be required. Up to $275 trillion in cumulative spending by 2050 to achieve net zero ambition according to some estimates. The corresponding challenge is where all this capital will come from. Some global equity investors do recognize the current capital supply-demand gap, and they acknowledge more investment is needed. But for some, any expression of interest in oil and gas is challenged by their investment committees. As a result, even projects offering solid returns will face a shortage of available capital. Moving on, another challenge for capital market is the difference between the developed and developing world. In the developed world, alternative energy sources and technologies are being heavily incentivized by some governments. There is, as you know, a risk in taking a policy-driven over a market-based approach. As countries approach full-scale deployment, these incentives will become difficult to sustain because of their sheer magnitude. Meanwhile, in the developing world, the global energy transition has major economic and social implications. Public funding of energy transition on a scale and at a speed comparable to richer nations is simply not possible. Emerging markets are already struggling with high levels of cost. At the end of 2020, debt in developing countries stood at over 200% of GDP, a 50-year record. To reach net zero ambition globally, we clearly cannot ignore developing countries. In fact, we should all be concerned that continuing to impose unrealistic energy transition plan will lead to unintended consequences. Consequences that include but are not limited to compromising affordability, creating energy insecurity, even pushing people back to burning more coal, more wood, more animal waste, something that is already happening. That all said, the biggest single challenge for capital market related to the global energy transition is striking the right balance. In particular, financing new energy sources while also continuing to support conventional energy and its decarbonization. And I have to say, the current investment imbalance is leading us down a dangerous path. In 2022, for example, the world committed $1.1 trillion toward the global energy transition. However, investment in two critical areas, namely carbon capture and storage, and also hydrogen, accounted for less than 1% of this total. Ladies and gentlemen, my message for you is straightforward. Capital markets have an obvious opportunity to concurrently address the trilemma of energy affordability, energy security, and sustainability by restoring investment in vital conventional energy sources, by increasing investment in technology that reduce the carbon footprint of oil and gas, and of course, by continuing to invest in new energy sources, including renewables as well as blue and green hydrogen. In other words, there are wide-ranging, financially attractive opportunities for you, provided you adopt a more holistic and just approach to investing in the global energy transition. Thank you.
Engineer Al-Nasser, thank you very much for that forthright, erudite, and eloquent speech, which I think addresses many of the most important issues that are current
in capital markets and indeed in the wider economy today. We're just setting up now for our next speech, so just bear with us for a moment and we will be on with the next session. Okay, thank you very much. We are now ready to move on to the next session. Our next moderator and in the tag team this morning is the well-known to you as the co-host of Bloomberg's Daybreak Middle East. It's my pleasure to invite Yusuf Gamal El-Din to the stage, and he is joined for our next fireside chat by Adina Friedman, the President and Chief Executive Officer of NASDAQ. Yusuf, Adina, please join us on the stage. Thank you very much. Go on, give them a bit of a, come on, let's have some applause. Thank you.
Thank you very much, Richard, for the introduction. Ladies and gentlemen, Sabah al-Khair, good morning. I'm thrilled to be here back in Riyadh. I love the energy. And this is going to be a special panel. NASDAQ is a brand that we all kind of grow up with. And it's surreal to witness the brand today because you appreciate how complex and how large it is an institution that reaches all around the world. So it's a privilege for me to introduce Adina Friedman, the chairman and CEO, chairwoman, and chief executive officer at NASDAQ. Thank you for joining me here. I kind of want to start about the journey to Riyadh. I ran into you at the airport yesterday. I wanted to say hello, but she's so fast through immigration, I just couldn't keep up, and she was, out the door. Talk to me about the relationship with Saudi Arabia and the NASDAQ.
Sure. Well, our relationship with Saudi Arabia started 25 years ago. We've been here working with Tadawul and the CMA as they've been really working hard to advance their capital markets, bring them into the international community, bring the international community into Saudi Arabia, and it's been a fantastic partnership. We provide the technology that underpins the exchange, as well as providing surveillance technology to the CMA, but it's beyond technology. It's a true partnership that we have with the exchange and with the CMA, as they've been really thinking about how they want to bring the capital markets forward. They're incredibly innovative and incredibly advanced in the way that they're thinking about their economy. And I think as a result, we've had a really wonderful relationship for 25 years. And I'm really pleased to be here at this event. I mean, it's amazing. I was here at the very beginning watching the video, And it's just incredible how fast Saudi has been developing and advancing their markets, and how much more international investment has come into the country as a result.
You talk about a relationship that's lasted 25 years. Where would you say have the milestones been in that journey?
Sure. I mean, we have 25 years of milestones, but I'll focus a little bit on the more recent. I think what was one of the really interesting elements of the capital markets here in Saudi Arabia up until about 5 years ago was actually Saudi was more advanced than every other country in how they managed settlement. So they allowed for basically pre-trade risk checks into the market, and therefore it enabled them to have same-day settlement. Well, as they thought about bringing more foreign investment into the country, they actually had to take a step back and move to T+2 settlement to make it so that they were more in line with the international community. But that's how advanced the markets have been over so long that they took a step back. They're now at T+2. So that was one step. It was just kind of bringing their standards along with the international standards, and that was in 2018. Since then, they've been on this incredibly dramatic path to introduce more asset classes into the country, launch derivatives markets, as well as to continue to advance on their settlement, their post-trade infrastructure, to make it so they could be more nimble in bringing more asset classes into the country. It is a very, very complex technology, frankly, to manage the post-trade technology, to introduce clearing into the entire environment, to take their settlement systems and make them incredibly modern. That's a very, very it's a very, very big undertaking. They've taken it on with an enormous amount of investment and energy, and I think as a result, they're now at the point where they can really start to accelerate the new asset classes they bring in.
I want to build on that a little bit, just in terms of the momentum, because Saudi Arabia is currently the fastest G20 economy, and with that comes a lot of just a lot of energy. I'm wondering what the future looks like and how you are planning to play the Saudi growth story from a sort of, even if you want to look at it as a major player around the world.
Sure. Well, I think when we think about NASDAQ, I think a lot of people don't understand the full breadth and scope of what we do today. So we provide technology that powers about 130 markets around the world. We also provide anti-financial crime technology that helps keep the financial system safe. And then we also provide capabilities that allow investors and corporates to connect better together, whether it's supporting corporates with their investor relations programs and their governance, as well as providing investors with key tools that help them with their asset allocation decisions. So when you bring that into Saudi, we actually support them on all three of those pillars of our organization. So we, of course, as I mentioned, are a technology partner to the Saudi Exchange. We're a technology partner to the CMA with the surveillance capabilities, but we also have actually seconded their team into our organization to help make sure that they understand how we manage our surveillance program. And then with regard to corporates, we provide investor relations support to companies that are listed in Saudi, including the largest companies here, as well as providing asset owners and asset managers with workflow tools that help them manage their asset allocation decisions. So everything that we do as NASDAQ is we provide on a partnership basis in Saudi to make sure that they can basically accelerate the advancement of the capital markets. And we are very proud to be a partner here within the region.
You have a new corporate structure, and it's something that it's taken quite a bit of time from you personally with that big adaptation. I'm wondering how that new structure gets reflected in this part of the world, and where you see the biggest pockets of profitability for the NASDAQ.
Yeah, so, well, as I mentioned, we have kind of three key pillars. So what we did with our reorganization is we brought our markets and market tech business together under one division, so that as we think about partnering with exchanges around the world, we think about it, first of all, making sure that we focus on market modernization, bringing the cloud into the market infrastructure, bringing more data analytics and AI into market infrastructure, and to make it so that markets can, as I said before, kind of bring more foreign investment into their countries to help their economies evolve. I think Saudi is obviously a very developed market now. So, but when we think about other markets around the world, bringing more capabilities to allow them to advance their markets in a more modern way, to bring asset classes more quickly into their countries, are things that we really focus on. But as a market operator, because we obviously operate markets in the US as well as in Europe, We have a lot of expertise on market structure, on things, how do you bring an ecosystem along? We have great relationships with market participants. So as a technology partner, we want to be more than a technology partner. We want to really help our clients really think through how to advance their market structure to bring more foreign investment in, how to actually connect participants into their markets more efficiently and effectively, and how to make it so that their infrastructure is on a modern technology stack to make it more scalable, more secure, and more adaptable. And so if we think holistically, that's one of the divisions. We then also, as I mentioned, think about corporates and investors. I think that Mr. Nasser was talking about this issue of how do you make sure that corporates and investors understand and think about strategies holistically, connect better with better information and transparency. Think about energy transition as a 50-year journey that we all have to take together.
Okay.
Think about ESG in a more holistic way. And so we provide a lot of transparency tools as well as workflow tools that help connect investors with corporates and vice versa. And then on anti-fin crime is our third pillar, and that's where we provide banks and broker-dealers and regulators and exchanges.
That's mostly in the United States, I think, for now.
Well, that one,
right?
for the banks it is, but for regulators and exchanges, it's a worldwide service. So we provide them with the surveillance technology that helps them root out market manipulation and bad behaviors in the markets.
So apparently Dubai, Riyadh is now the busiest route in the world in terms of number of passengers carried per 24 hours. And it kind of brings up the broader question about the competition between the UAE and Saudi Arabia, perhaps more specifically Dubai and Riyadh in terms of wanting to be the lead capital market destination in this part of the world. Both probably have bigger ambitions beyond the region. It's not anymore about being number one in the region, it's about ranking within the top 10 or 15 around the world. Do you have a view, Dubai versus Riyadh?
It is not my job to have a view. I think we provide technology to almost every exchange in the region. We're here to make it so that they have the capability to be as competitive as possible in the global capital markets. And frankly, to leverage their strengths to bring more investment to the country, but also to develop the local economy to be as strong as possible. So I will say that we're a neutral provider and a partner, but we also believe that actually this region is one of the fastest growing regions of the world. And what's amazing to me is how quickly all of the markets have really kind of developed and thought through their role in the global stage, on the global stage. I think Saudi has just done a tremendous job of bringing more and more capabilities into the country to make it so that they are a truly global player in the capital markets. I mean, they're standing in the markets today, they're in the top 10. I mean, that's kind of an amazing accomplishment over a very short period of time. And I think it's a testament to the amount of focus, energy, leadership that exists here in the country.
And so within the region, you've got the UAE, you've got Saudi Arabia. If you had to add a third country here in terms of the big pocket of development and additional growth, which one would it be within the Middle East?
Again, I'm not going to try to say. I think that frankly, between, certainly among Saudi as well as UAE, there's just an enormous amount of momentum. And frankly, some amazing companies too. I think it also is the strength of the companies that are here, the size and scope, their global scale. I think all of that really does play to the strength of both Saudi and UAE in terms of on the global stage.
My understanding is that you sit on the board of the New York Fed, and we begin to think about the year ahead, about the macro uncertainty, about inflation and interest rates. So I'm going to break this down a little bit because it also affects this part of the world. Let's start off with inflation. You think we've seen the worst, or is there still a little bit more pain to come this year in 2020?
I do think we've seen the worst. I do. I think that we're starting to see interest rates on a steady decline. However, I do think that there could be persistence in inflation in a way that I think we have to start to be ready for. I've been talking a lot about the fact that we went through a 14-year experiment of free money. That is, but if you think about the 50 years prior to that, we've always had an environment where money costs money. There is a cost of capital. I think we're just returning to that world. And when we look at even in the period of the 1990s, interest rates were steadily in the United States somewhere in a 5 to 6% range, and we had incredibly vibrant capital markets, great growth in the economy, So I think that we have to recognize that having a cost of capital, you can have a very sustainable, growing economy on the back of that. But I do think that inflation will come down, but I think it'll stay persistent for a period of time, probably longer than we originally anticipated when they started bringing interest rates up.
And what does that do then to the interest rates? Saying they come up, but how far do they go
Yeah,
up? Because
I mean,
as of last week, people are starting to say maybe 6%, maybe north of 6%.
I personally am optimistic that we will find a balance point in the 5% range. That's my personal view. Of course, this one person's view. But I also think that we will end up staying there for longer. I think that there's been this prevailing view that we're going to have to get up to a peak rate and then start to bring the interest rates down. I'm not actually of the view that will happen very quickly. So I think it will probably hopefully settle out a little north of 5% in that range. But we may end up having to live in that world for a period of time because there are some elements of inflation that are structural and not just transitory. I think that's an area that the Fed is really starting to study. The energy transition is a long-term inflationary trend because, as Mr. Nasser said, there's an enormous amount of money that has to be put into the economy to manage that transition. I think the second is the supply chain resiliency efforts that are underway in terms of recognizing the need to have multiple sources of supply around the world. That's certainly an inflationary trend. And then I think also the amount of government spending that has happened certainly in the US and Europe, not only to get us out of COVID, but also to manage some of those improving infrastructure, other things like that. There's still a lot of money yet to come out. There's some payments were made, but there's still money filtering into the system. I think all of those things will create a more persistent level of inflation that we all are going to have to live with and adjust to.
I mean, a lot of the uncertainty, not just around interest rates, but also around the geopolitics, that's arguably a headwind for IPOs. It hasn't helped IPOs in 2022. It hasn't helped IPOs so far in 2023. You think we're going to get to a place late in 2023 where you can say that some of these uncertainties have been resolved so that more people come and do what you like them to see them do, which is list?
Right. Well, first of all, I think we heard that in Saudi there's actually a very vibrant capital market IPO environment in 2022. So they kind of bucked the trend in terms of the rest of the world. But in terms of the U.S. and Europe, I think if you think about what is it that makes it so an investor is confident in underwriting a new issuance. Right, so they have to get to know a company in a very short period of time. They have certain limited information. They don't have any history with this company. And they have to be able to predict the future performance of the company. Well, there are macro factors that determine the future performance of a company. The cost of capital is one of them, as well as the inflationary environment is another. The labor environment is a third. So there are three major unknowns that have existed in the last 18 months. What's the cost of capital? So what are the interest rates going to be? Where is inflation going to settle out? So what's their expense base going to look like? And then what's the macro environment going to look like in order for them to attract talent, but also to grow their business? I think all of those things will become a lot more known within the next 3 to 4 months, I'd like to think. That will then allow investors to make more confident underwriting decisions as they're coming out with, as they're making investments. We have 200 companies on file to go public on NASDAQ. We'd really like to see them have a very inviting environment. I think that's starting to loosen up. We had 2 sizable IPOs last week. And so I think that we're going to start to see more capital come out into the market this year. I also would say, if you look back again over the period of the 90s and the entire decade, we had hundreds of companies go public every year in an environment where interest rates were 5 to 6%, in an environment where growth was still very healthy in that environment. So I think that we can get back to that. We just have to recognize that it's an adjustment that everyone's having to make right now.
What about the reopening of the Chinese economy and perhaps a normalization of some aspects of the US-China relationship, which perhaps is away from the mainstream view, but from your sources and from your interactions, you're actually seeing a light at the end of the tunnel, isn't that right?
Yeah, I think there are a few things. There was a very technical accounting issue that really kind of created a challenge between the US and the Chinese government that seems to be resolving itself. They have come together, the regulators of both countries have come together to determine a path forward for us to be able to have the level of transparency that the US government expects from companies that are listed in the United States. So I think that seems to be moving forward in a positive direction. We also now actually, one of the two larger IPOs that came out this past week was from China that came listed on NASDAQ, which is great to see some more capital being raised in the United States from companies from China. I think also, as you said, that there's a shift. It feels like there's some shift in the government policy in China in terms of as they're reopening their markets, as they're reopening their economy, and the people of China are going to be able to travel again. I think that there's a general sense of let's figure out a way to make it so we can have a really strong economic relationships around the world. So we're hopeful that that creates a more positive momentum in the overall relationships, which of course is good for capital raising, it's good for global capital flows, and we are a huge believer in the global capital markets. We think that the free flow of capital around the world is frankly the foundation of a strong economy. So we're hopeful that we'll see more positives coming out in the next few months and years.
I mean, speaking of travel, are you going to see anything here in Riyadh? Are you going to do something touristy before you head out?
I wish. I'll be here for all of 2 days. So I actually, it's been since COVID, I haven't had a chance to travel in the region or travel into Asia. So I have a trip across the Middle East and Asia over the next 2 weeks. And so I'm actually really excited to be here. I'm really excited to be able to meet clients, see clients again, see our employees around the world. It's really, it's a wonderful time to be back out and traveling around the world.
Adina, we'll leave it there. You've been very generous with your time, so thank you for that. That's Adina Friedman, the chair and CEO of the NASDAQ. Let's give her a warm round of applause. Thank you.
Thank you. Thank you. Thanks. Oh my God, thank you. It's great to see you. It's great to be here.
Youssef, Adina,
yes,
thank
exactly.
you for that.
Thank you.
High energy
How are you?
and positive session. A bit of positivity is a good thing.
You're doing good.
Right. We have, we're running a little bit late, about 12 minutes behind our schedule, and I know that you are all interested in lunch. But before we get to lunch, we have a series of more in-depth presentations on developments in the Saudi markets, and then we will close out the morning with a series of announcements, newsworthy announcements about various partnerships and joint ventures and initiatives between Tadawul and some mystery guests. But before that, I would like to welcome Lee Anthony Hodgkinson from Tadawul to the stage. Lee. So Lee is the Chief Strategy Officer of the Tadawul Group and is going to give us a presentation from the middle of the stage about pathways to growth and the ambitions for the future of global stock exchange. So Lee, over to you.
Thank you, and good afternoon, everybody. I will be whizzing through our strategic thinking just to catch up on time. And not prevent you from your lunch. If you think about strategy generally, how you pull it together and how you create it, in my mind, you're best served by starting with a classic strategic theorist. So Clausewitz and Sun Tzu and the modern era people like Colin Gray. And what they will say to you is that you need an audacious goal. You need to know where you are going on your strategic journey and what success looks like. And you've heard this a couple of times this morning already, but the goal set by the Crown Prince for Saudi to be among the top 3 largest exchanges on the planet. And the question that I most often get asked is, can you do it? And I think what I would say unequivocally is not only can we do it, but we will do it. And if you start from the perspective of economic power and economic growth, what we see is Saudi being a world leader with growth of over 7% and an outlook that will be sure to exceed that of its G20 peers in the years ahead, plus low inflation rates as well. So our economic conditions are very finely poised for growth and success, and will provide strong tailwinds to our strategic ambitions. And if you look already at this top 10 list of global exchanges, many people are surprised, but we are already at number 9 on that list. There is no reason why, given time and given the extraordinary vision and the dedication and the drive of this nation and the government, His Excellency at CMA, Khalid, and Sarah and the executive team, there's no reason why we can't continue to rise up that ranking as we go through the coming years. So how will we do this? Well, you heard Khalid this morning talk about positioning Saudi Tadawul Group as a pivot between East and West. And I think that is a natural geographic place for us to play. I believe that we can legitimately operate 4 hours east and 4 hours west of our time zone, seeking to capture activity from West Africa, particularly countries like Ghana, Nigeria, all the way through Africa, obviously North Africa, Europe as well, through India, Pakistan, Bangladesh, and down through Malaysia and into Southeast Asia. And there is no reason why we cannot position ourselves for success as that pivot. We will do this via a dual mission. Firstly, with a domestic and a regional focus to expand our leadership position, we will be focused on building out all of the activities and plans that we have underway to fulfill our obligations under Vision 2030 in the Financial Services Development Plan, and to extend our capabilities into regional leadership. That will be largely organic and tactical in terms of approach, and a lot of it's already in train. We're thinking of a 1 to 3 year time horizon. But success domestically and regionally in and of itself will be insufficient for us to meet our global ambitions, and certainly to meet the objectives set for us by His Royal Highness. And for that, we need to be thinking much more globally. In essence, our strategy will become big and global, and we will become a central access point over the next 1 to 5 years. Clearly, organic activities will be important, but non-organic activities will also have to play a part as we seek to diversify our activities, diversify our revenue streams, and also produce higher quality earnings. And so our plan today, which we continue to build out during the first quarter of this year in detail, sets 7 growth axes on top of existing operating company growth. The first is our no-regret, must-win component of equity and capital formation, one of the key themes, of course, of today's conference and tomorrow. And really, capital is the competitive advantage of Saudi and the region. Secondly, you heard His Excellency talk about the importance of debt markets today. This will be our second pillar of growth. And thirdly, global commodities. And we just heard from the CEO of Aramco. For the last 50 years, certainly since the fall of the Cold War, perhaps other than Beijing-Washington relationship, the Riyadh-Washington relationship has defined so much of the geopolitical landscape. And Saudi, as the de facto provider of energy to the world, has had to rely on Western benchmarks for pricing. We can't do much about the past, but we can change the future. And our commodities pillar will focus on ensuring products, services, price transparency for forward-looking commodities for real economy actors. We will provide those efficient risk management tools to help people manage the transition to net zero. And Saudi is a global leader, not just in energy, but in fertilizer, in base metals, and there'll be a number of other future commodities that I think will be critically important, water being one of them, hydrogen, and a range of other products. So whilst we may not be in the commodities business today, I think you can expect us to begin thinking about how we deploy it in the years ahead. Derivatives and over-the-counter trading will be critical as we expand not only our markets offering, but also our clearing business. And in the same vein, global security services, investor CSD activities, helping banks and asset managers manage capital and security services regionally, but with global relevance, will be the key. Finally, data and analytics and global unique intellectual property, for example, indices, will be a very valuable source of non-transaction revenue for us under our financial goals of diversifying revenue and improving the quality of earnings. To do this, in addition to the operating company growth, we will need to be focused on 3 new activities for the group. The first is to make sure that we are maintaining relevance when it comes to next generation technologies. That's not to say we have to be a leader in every particular aspect, but we do have to have the capabilities in cloud, artificial intelligence, machine learning, distributed ledger technology. The technologies of the future will become increasingly important for a globalized exchange group like ourselves. We will also need to focus on selling. As we become a global franchise, our relationships with international clients, both banks, brokers, proprietary trading firms, asset managers, and advisors, we need to scale those. We need to have that global interconnectedness across the world. And finally, we will need to develop M&A capabilities because, as I mentioned before, our organic growth will be powerful, the opportunity is significant, but it will be insufficient alone for us to achieve our global ambitions through a purely organic and tactical set of activities. So, finally, we will need to think very carefully about how we adapt our organization as we go forward. But I think the future for Saudi Tadawul Group is incredibly bright. It is incredibly ambitious, but I think what we're seeing today is that the ability for the nation and for the organization and for the capital markets ecosystem generally to achieve these goals is becoming very, very clear. And that's why I joined the organization. I can't think of a more exciting place to be in the exchange business worldwide. And I'm absolutely delighted to be here and very grateful for the opportunity to give you a small glimpse into our strategy. And I'm around if you want to talk more today and tomorrow. And of course, you can always reach us. Thank you for listening and enjoy the rest of your day. Thank you.
This is the first time I've ever done a conference from the middle of the room, but I think it's fantastic. Thank you, Lee, for that whistle-stop tour of the future strategy, the future ambitions of the Tadawul Group. It's going to be fascinating, I think, to see how this story develops over the coming years. And looking back at the track record of the last 10 years, I think it would be a brave person who said that they weren't going to achieve, if not all, at least the very large majority of those ambitions. And to continue with the word of the morning, word of the early afternoon, which is ambitions, will you please join me in welcoming Mohammed Al-Rumey, who is the CEO of Saudi Tadawul, who's going to talk about the capital of ambitions, financing tomorrow's opportunities. Please give him, Mohammed, a warm welcome. Thank you.
Thank you. Assalamu alaikum wa rahmatullahi wa barakatuh. Good afternoon, ladies and gentlemen, and welcome to the second edition of Saudi Capital Market Forum. We've heard the word ambitions a lot today. And I want this session to give you a boost in your confidence and good news for the members or brokers. I will not be announcing anything new. We have been listening to you. You've said to us for the past 5 years, you have given us a lot of work, but you're doing very well. But we are not slowing down. The session is about the previous session. And if you recall the first slide, we aim to become the third largest market. And if you remember the goal before that, to become one of the top 10 exchanges, we've heard a lot of skeptics saying that we will not be one of the top 10. And today, we are one of the top 10 globally, top 3 in emerging market, and number 1 in MENA and GCC, and actually number 1 in MENA, GCC, and Europe in terms of IPO proceeds for the last year. I think there's a problem with the slides, but I do remember the figures very well. So the main market, the flagship of our markets, how does it evolve? In 2018, the market cap was 1.9. Today, it's 10 trillion. The trading value is about 700 billion. Now we've doubled the trading value. Number of companies went from 190 to 223. The Numu market, growth, a market that deserves the name. The number of listed issuers went from 10 in 2018 to 46, and actually today it's 49. The traded value went 15 times to 13.5, and the market cap also went 15 times to 35 billion. What about the other markets? ETF and Sukuk, this is the debt market. Total issue is 280 billion, went to $500 billion. The traded value went 20 times to 11 billion, and number of listed Sukuk went from 62 to 74, and this is one of the markets that you should look closely at it. We believe it's gaining a momentum, especially with the last issuances from Raj Sukuk, and attracted a lot of investors, more than 60,000 investors and 125,000 subscribers, and this is just the beginning. This is a bad time to change the slides. So, what did the capital market finance in terms of sectors? I think we need to zoom out a bit. We financed in the past 5 years more than 100 companies. Mostly from the retail, from the real estate, 17 companies, 11 of them are REITs, followed by industrials, and then materials. But when it comes to the offering value, most of it went to the energy because of Aramco, and then the retail. This slide, I put it exclusively for this event because this is one of the most asked questions. How many applications do you have? I know His Excellency today said that we have around 100. Yes, this is exactly the number. If we put aside the debt market, we have 90 applicants. 22 of them already got the approval. And we have terminology we use. If a company got the approval, they are in honeymoon. So they have 6 months just to go public. That's a long honeymoon. And today we have most of them concentrated in the IPO market. And we're planning to launch the depository receipt inbound, which will unlock further opportunities and bring more companies, especially foreign companies, to our market, following the successful cross-listing of Americana. We are working also on direct listing for the main market and SPAC, but that will happen later. Let's look at the other side of the equation. The number of investors we have. So the main market in 2018 was 2,200,000, went up by 50% to more than 3 million investors. And if you look at the NMO market, went from less than 1,000 to 10,000. I know it's a small number. And the debt market went from 62 to 62,000 today. What it shows here that we have great potentials in the NMO market and the debt market. And we've heard His Excellency previously that they're looking at easing the restriction on the parallel market, given the great momentum we have over there. And we believe the debt market with more issuances will reach to numbers similar to the equity market. If we zoom in to the main market, specifically to the foreign investors, QFI, and see the involvement of the Saudi market in the indices, we went from 2.1 in the inclusion, and now we are double, 4.1. But what about the average fund weight, the active funds? And those are the funds that they don't follow the indices. So it's more challenging to bring them. But yet, the market has managed to double their positions every year in the past 3 years. And today, we are at 1.1 from their fund. So if you compare to 4.1, there is a great potential to increase the inflow from the active investors. What about the number of QFIs? We had 453, and now it's more than 3,000 as of today. Where did they came from? Naturally, most of them came from the US, followed by Europe, and then UK. But what is significant is that we've noticed a great interest from the Asian investors, especially last year. And we believe most of the new QFIs will be coming from Asia next year. What about their activity in the our market? In 2018, they only owned 13.7. Today, more than 270, 2.7 of the total market, and more than 14% of the free float, and growing. This is due to new IPOs, increase in free float. And what about the value traded? They used to trade 52 billion a year. Now it went 10 times. They've traded 531, representing 15% of the daily trading activity. ESG disclosure and ESG. And this topic specifically is very strategic to us since we become a member of the Sustainable Stock Exchange back in 2018. And this is one of the areas that has the best growth globally. They grow in double digits, and there are trillions of AUMs guided by the ESG. So as an exchange, we have responsibility and duty in front of our issuers to tell them about the massive potentials from ESG disclosure. And we've launched our ESG guidelines back in 2021, and we've seen a great interest from companies. We've done one-to-one meetings, ESG webinars, and the participation was outstanding. That resulted in doubling the ESG disclosure last year, and we expect even this year to go 50% more, and we reach 30% of companies doing ESG disclosure. That brought a great growth also in the ESG focused investments from 1.93 to 2.96. This is ESG specific investments only. And we are planning to announce something to enhance and also create more momentum, given that even the Vision 2030, it's all about the sustainability. If you look at less reliance on oil, redoing the energy mix and increase the renewable, women empowerment, focus on the SME growth, all are sustainable. So that's naturally to be trickled down to the government and to be very important for the business owners as well. About announcements, we've announced the market making framework back in December last year, and today we're happy to announce that we have 4 of our big members, SMB Capital, Al-Rajhi Capital, Riyadh Capital, Diraya, are intending to provide market making to the equity market. The second announcement is the third product in the derivatives market and the most anticipated one. Single stock option will be American style, physically settled. We're planning to launch it second quarter, subject to regulatory approval, of course. And we thank our partners, SMB Capital, HSBC, Diraya, those are the existing derivatives. And we will welcoming two new members, Riyadh Capital and Al-Bilad Capital. Speaking of new members, we congratulate Musharaka Al-Maliya for passing the Tadawul certificates. So they'll be joining the cash market as well. So this is what we are trying to give you a bit of pride of the development that happened in the Saudi capital market. And the goal is not impossible to reach, become the third largest. And I came to a quote that I really like recently. Impossible is not a fact, it's an opinion. ونشكر قائد الرؤية سيدي ولي العهد على تمكيننا لنحلم بالمستحيل ونحققه، وإن شاء الله بدعمنا والتعاون والتكاتف راح نحقق الهدف ونصبح ثالث أكبر سوق بالعالم. شكرا لكم. Thank you. Thank you. Slides wrong. Yeah.
Excellent. Mohammed, thank you very much for that. I'm hoping, I'll make sure with the organisers, I'm hoping those presentations, and indeed the one coming up, will be available via the conference website. A lot of facts in there that I think are important and interesting. So, to our final short presentation of this session, and I'd like to welcome to the stage my old friend Mazen El-Saderi, who's the head of research at Al-Rajhi Capital, to talk about the debt market. Mazen, all yours.
Okay. I'm facing difficulty actually to manage my slides. But I'm promising you it won't be boring. A 5-minute. Okay. proceed. Okay, thank you for your patience. It's a pleasure. And the name of Rajhi Capital, well, thank you, ladies and gentlemen, for coming here and sharing with you our outlook. And the subject is actually very interesting regarding does the fixed income catch up with the IPO leak? And there is so many parameters to revise and to discuss it, but I'll take just one parameter, which is the market, keeping other important parameters to try to analyze it or just creating a conclusion and outlook. We start actually with fixed income and general. During I picked this slide, the global pension fund breakdown assets. And I picked the pension fund. The reason for picking pension fund is usually there is a similarity between pension fund breakdown and allocation of assets. We don't find it with other institutional investors. For example, sovereign funds, some sovereign funds are investing in passive financial markets, and other sovereign funds are much diversified. Endowments, some of them are concentrated in alternative investment and other concentrated in financial assets. So I believe pension assets are more representative and have much similarity. If you look to the breakdown of bonds, you will find it actually less volatile. It was ranging between 34% till 27% in the last 25 years, the last 23 years. In the last 23 years, we faced the pandemic crisis, we faced the financial crisis, we faced the bubble, dot-com bubble crisis. So all of this volatility shows it was less volatile relative to other assets. Equity, actually, on the other side, had fell down by almost 27%. Alternative assets has grown up from 2% to 21%. I think the reason behind that was two reasons. In terms of risk of bonds, and then the other side, moving with the interest rate had given fund managers a momentum in allocating to bonds. So I think regarding this changement, is the weight of bonds gonna increase forward? Let's look today what we have. This year is a special year. It's actually followed by a special year 22, where interest rate has risen from almost 80 basis points to almost 5%. 4.5%. After inflation had reached a level was not tolerable from central banks. Since then, usually when inflation goes up, commodity goes up. Or what drives inflation started to be actually commodity. And after that, market. And after interest rate rise up, market comes back and try actually to allocate more to cash and to allocate to money market. What did happen during this year? What had happened in 2022, the financial market had actually struggled. If we look to the Bloomberg investment US fund, bonds had depreciated by 13%. On the other side, MSCI World as an equity had depreciated by 20%. In fact, bond had actually beaten equity in 22. If we look to two different markets in equity, for example, Tadawul and S&P, despite the difference of two market of participants, the different actually of investors, the difference of liquidity, if a corporate companies are being listed with them resources and business model, they have the same structure. The more interest rate goes up, the more market had correct and goes down. Do not fight the fit when interest goes up. And the reason is when interest goes up, market will require higher premium from equity market and from financial assets. And had that create this severe discount. Markets start to increase liquidity and deposits and money market, time deposits. We saw in Saudi Arabia, according to SAMA, monthly publication, that time deposit has grown up from 24% to 28%. And if we go back to history, between 2003 and 2007, when interest rate rise from 1% to 5% with high oil price, we saw that the time deposit had reached 40% in 2007 in Saudi Arabia. So there is a room that there is expectation for more time to deposit. So as we said in the beginning, when inflation goes up, usually commodities. And when interest rate goes up, usually money market start to actually increase. And when interest rates reach almost the peak, and peak close, when expectation that the Fed will maintain the interest is trying now to assess. And this year will be actually might reach the peak, most probable to reach the peak of interest, and then actually will assess the impact in interest rate. From history, we learned this is the time that market actually start to invest and or increase investing in fixed income. And that shows the demand that might actually accelerate. I would like actually to pass from this demand side regarding the market and interest rate to give just a color in Saudi issuance of bond. Number of bonds being issued in Saudi Arabia from corporate bond from 20 till 22 was quite decent and close to the number of IPOs. But if we look to it from GDP, as a percentage GDP relative to United States advanced economy as United States, we'll find it in a state actually 4 multiple relative to Saudi Arabia. And this is give us a room and a signal that we might see increase of issuance in Saudi Arabia relative to the level of GDP. And the market, and the liquidity market, with this level of price, oil level of price, if we took actually from a historical relation between non-oil GDP and demand of borrowing, it's about actually multiple 2.2 to 3.2, the multiple between them. That shows us that we might see corporate borrowing above 10% in the coming actually 3 years. If oil prices maintain between this level of 80s, and according to our Rajhi Capital calculation, we assess that the break-even of Saudi budget 23 was based on $77. So with the level of oil, according to forward market, and between 80 to 85, it's good enough to actually to fund the government spending and create the target surplus. And with this spending and growth actually of borrowing, we're seeing a gap between deposit and demand in the last 3 years. That borrowing was exceeding deposits. Is that actually singling or rising the idea that might borrower search for a new channel as a fixed income and to raise more bonds in the market, a part of the banking lending, or then beside it to create more channels to lend and support growing. So from demand and side, as a size of interest rate in this year, and the other way, size of borrowing in the economy, we think this is actually, we might see increase in weight. The weight of bonds portfolio might increase in year 23. And back again, we actually still believing that the second important factor as oil market will give actually decent level of or lower level of volatility, especially with actually changement you saw in an oil market that make it actually follower or actually who's with oil market become more optimistic, especially with the recovery in China and the supply struggles. So we think this is a new year of a new actually increased weight of interest rate. We had experienced different crises and different changement. And I think this year might be a year of adding more weight of fixed income. Thank you for giving me this chance. And I hope in this 10 minutes I could share with you our outlook. Thank you.
Thank you, Mazen, for a greatly informative presentation, diving into the market rates, trends, opportunities, potentials of a thriving financial sector in the Kingdom of Saudi Arabia. And now, ladies and gentlemen, we'll have 1 hour break for lunch. We expect having you back with us in an hour from now for a second part of the first day of the Saudi Capital Market Forum 2023. To our virtual audience, stay connected. We have an interesting agenda in store for you. Enjoy your break and lunch. See you soon. Thank you.
What is it? The thing.
on after 9 o'clock. following neon after 9 o'clock.
Sessions will resume in 10 minutes. The sessions will resume in 10 minutes. The sessions will resume in 5 minutes. The sessions will resume in 5 minutes. Sessions are live. Sessions are live.
Esteemed guests, our viewers who are watching us from around the world, welcome back. Last year, the Saudi Tadawul Group and Saudi Exchange introduced the highest number of post-trade enhancements in the history of the Saudi capital market. But that was the past. Looking forward, it's essential to identify future routes for growth. To moderate the next session, I would like to welcome to the stage Maryam Saliba, journalist and media trainer, who will moderate and navigate the discussion about the future of post-trade with her esteemed panelists. Maryam, welcome to the stage. I pass the mic to you.
Good afternoon, everyone. My name is Maryam Saliba. I'm a journalist and a media trainer, and I will be moderating the session, The Future of Post-Trade. May I ask my panelists to join me on stage, please? Ladies and gentlemen, please welcome Mr. Raed Lahmed, CEO IDA. Mr. Wael Al-Hazani, CEO Muqasa. Please. The pace of change in Saudi Arabia has been phenomenal in all sectors. In this session, we will talk about the post-trade readiness for the future. We will talk reforms, initiatives, strategies, trends, challenges, and opportunities. But unfortunately, we only have 30 minutes, so we won't be able to take questions from the audience. But before we hear from our panelists, let me give you a quick brief of IDA and Muqasa for whoever who still don't know what they do. The journey of IDA started in 1984. In 2017, IDA was a separate entity focusing mainly on the depository, clearing, and settlement. They are still part of Tadawul Group, one of the 4 subsidiaries, just like Muqasa, but their main role is to make sure everything is running legally, smooth, and safe. They also provide lots of additional services, such as AGMs and dividend distributions, and a lot more. Compared to IDA, Muqasa is a much younger entity. Established in 2018, Muqasa is the only authorized clearinghouse in the kingdom's financial market. Also, their main job is huge and important. So they work to reduce the post-trade risks and provide a centralized counterparty risk management. So basically, they act as the seller for the buyer and the buyer for the seller. And they manage the settlement and make sure all parties will have less risks. So I want to start by asking my two friends, actually, and my two colleagues, because we met last year in a session. Since we met last year, Raed, what has changed? We talked about changes, we talked about milestones of IDA. How was 2022 for you?
So thank you very much, Mariam, and good afternoon, everybody. As you rightly mentioned, I think at the same event last year, we were talking about what other enhancement that we will be doing in the post-trade environment. And definitely, if we want to talk about what is the main activities or achievements that has been done in 2022, I think the first thing would be the changing of the core system, of the post-trade in general, in Tadawul. This has been a very massive change of system for the IDA, Muqassa, and the exchange as well, and with the contribution actually with all the members. So a month after last time and the event that started, after a weekend and the first weekend of April, the go live has been for the new system with the biggest bundle of enhancement for the post-trade. Now I think the implementation itself is just the start, because the potential of the system is definitely will open a lot more. Today, the core system of IDA, Muqassa, and the exchange has the highest technical standards, as well as the latest functionality that will serve the market. So today, this will definitely help us provide much more automation with our members, would also provide much more automation with other markets as the ambitious that has been discussed earlier. And I think by providing better services and better function to our members will also provide more services and function to their clients as well. So definitely the first one would be the core system. Second one for the 2022, I think has also been touched, is the participation of foreign investments. And from IDA point of view, I think it's worth to mention that we started the year with 2,600 accounts at the beginning of 22. As of last January, the number of accounts for qualified foreign investors reached to 3,200. This is an increase of more than 22%. And I think this steady increase tells us that we are in the right direction, and that the effort that is done with Tadawul Group and all the stakeholders, the regulator and other government entities are actually reflecting in the market. It's worth also to mention that we have, for the first time, IDA participated in the questionnaire survey of the Association of a Global Custodian. And I think this is a standard question that helps a lot foreign investors while they are doing their due diligence to come to the Saudi investors to find a complete set of information in a standardized way that covers all aspects of IDA, whether these are the governance, the regulation, the settlement, the technology, all aspects has been covered as part of that questionnaire. And we also intend to start annually updating that questionnaire, because we know that it could be a very useful tool for anybody assessing our market, doing the due diligence before entering, finding it published in our website. I'll end the 2022 with the last point, which I think all of this progress, the system, the participation and making sure that we're compliant with the international standard, we ended the year with an upgrade in our overall risk assessment that is published by Thomas Mary. Our rating was A, and now we're even at a better rating, which is A+. And this also shows the assets are safely kept in IDAع, and how well are we implementing the international standard as well. That's a brief about 2022 from IDAع point of view.
That's great. Wael, talk to me about 2022. Did it meet your expectations when it comes to Muqasa? Was it a bumpy road?
Thank you, Miriam. مساكم الله بالخير جميعا. Yes, as we discussed in the last event last year, we promised that we will be delivering the biggest bundle of enhancements on the history of the financial market, and we did. In April, we introduced those enhancements successfully implemented by all market participants. All of these changes and enhancements done by the exchange, Depository Center IDAع, as well as Muqasa. And if we will talk about Muqasa, what the changes we introduced, I think Muqasa, back in April, we start to clear for the first time in our market the clearing of all exchange-traded equities, sukuk, bonds, and traded funds. Also, we served more than 36 capital market institutions and banks. For the period from April to December, we were able to clear 1.1 trillion riyal with 100% successful rate for our settlement. So all the traded instruments were successfully settled by 100% settlement ratio. 99.7 were settled in the first 2 days from the trading day. As a result of 0.3 late settlement, we compensated the impacted party by total of 5 million riyal, and this is paid by the failed party. This is just to compensate for the late settlement. And this is the role of Muqasa, is to guarantee the settlement and ensure the two parties of any trade fulfill their obligation and step in if it's required to guarantee the settlement. And this is the main role of Muqasa. That is on the equity side. On following month of that introduction, actually end of April, Muqasa introduced the first OTC products. We cleared back then the first repo transactions, and this repo is a secured short-term loans where one party sells a security to other party and agree to repurchase it at an agreed price at later date, and this the difference will assume to be the profit for the participants. And this is what we call the repo rate. And we believe this clearing surface of the repo transaction will help to establish the secure rate on the market, which will eventually improve and deepen our debt market. That is related to the repo. On June, also we introduced, along with the exchange, the clearing of the second derivatives product, which is the single stock futures. And all of this actually gave us very busy, I would say, 8 months. It is the first 8 months of our, I would say, starting on clearing on the equity market.
Mm-hmm. Ra'ad and Wael, let me just clarify to some of our audience. I know you guys all here are experts, but we have a lot of audience on the social media. And people think that when you buy a stock, it's just real time. And they don't know that there's so much work done before and so much work done afterwards. So I just want to call you the hidden soldiers. And for that, I would like everybody to give you a big round of applause for the hard work you've done.
Thank you very much. If you allow me, Miriam, I think since you have mentioned that there are lots of work to be done, and I think since that we have talked about 2022 and the massive change that came into post-trade, I think the real soldiers and the biggest army is the operation that has adopted and committed all of these changes from the members' side. And those are the members of IDA, members of Muqassa, and members of the exchange. I think that it has been lots of hours, thousands of testing for this to be success. I would really claim that this success has been a partnership between IDA, Muqassa Exchange, and their own members. So please allow me to thank everybody in here who has participated in that.
It takes real dedication, will, and a real leadership, and a good team, and hard-working team, really loving what they do to achieve what you've done, really. Let me talk about 2023. So we all know Tadawul has a big ambition to be one of the best and the biggest stock market around in the world. What is IDA's role in this? How you're chipping in? What are you doing? And what's your long-term strategy for 2023?
So I think it has been covered in the several panels that markets are definitely becoming global. And if you compare how was the market 10 or 15 years ago to what is happening now, markets are definitely becoming much, much closer together. Linkage is definitely something that needs to be utilized. And as mentioned, I think today the Saudi capital market is well positioned to be a regional and a global player. I think as an infrastructure company, as part of the Tadawul group, we'll definitely work with our colleague in the other subsidiaries and the Tadawul group as well to make sure that the Saudi capital market is well equipped, capable, have the advanced technology, just to make sure that we are also part of the global market. I think we have already started some of that. The recent dual listing with ADX for the Americana company, I think this came as a result of the linkages between the depository center in Saudi Arabia and the depository center in Abu Dhabi as well. And I think this is a start of definitely much more. And as His Excellency the Chairman said, I think the first one will definitely bring much more as it is succeeding. Now, lots has been done between the depository in Saudi and Abu Dhabi when it comes to aligning the procedure, aligning the transfer of share, making sure that there is a smooth operation and transfer between the two markets for that particular share. We will be more than happy to actually exercise others. We've definitely been part of lots of MOU within the region market. I think we have a number with Bahrain and Muscat, and we will see how this will develop. We're very excited after the first success. And of course, the aim is actually to link to as much more market as possible, just to make sure that investors has access to other, also that the Saudi market and the infrastructure company are capable of that linkage as well.
Muqassa.
Yeah, I will take about 5 main initiatives that Muqassa we are currently working on in 2023 and beyond. The first one is about today we introduce the bundle of enhancements on the Repo clearing. And here if just want to talk 1 minute explaining what are the major enhancements we introduce on Repo. We are allowing now a forward Repo, and we are allowing opt-out functionality. We are also allowing a rollout functionality, and we are extending dealing time. So if we'll talk about the forward Repo, this is where we will be allowing our participants to set a starting date that will be in future. The second one is opt-out Repo. We will allow our participant to initiate a termination on an existing Repo deal. The third one is the rollout that will allow our participants to extend a current Repo deal without need to insert it as a new deal. The fourth enhancement in the Repo will be extending the dealing hours. Today or until last Thursday, the dealing hour for Repo was from 9 to 2. Starting from today, we are extended by 1 hour, so it will be from 9 to 3, and we will be in future, inshallah, extended to be up to 30, inshallah. That is the first initiatives, and we assume that it's achieved by today. The second, we are working to introduce the second OTC products where we'll be clearing for the first time in the kingdom the interest rate swaps that traded off the exchange. We believe this will add an advantage to our participants where it will relieve the capital pressure they may have and also lower the cost because they will have access to multiple instruments where they can use the collateral deposited at Muqassa to clear as many as listed by Muqassa. The third one, as my colleague, CEO of the exchange, Mohammed Rumeih, mentioned, that we are planning with the exchange to introduce options as the third exchange-traded product in the derivatives market, and Muqassa will provide the clearing services for the option contract. The fourth one, we will be extending the eligible collateral for our market participants. As you may know, today we are allowing only cash to be accepted for collateral to fund the margin requirements by our participants. This year we will be extending the eligible collateral to accept non-cash collateral, and we will be starting with fixed income instruments. And as we go, we will add more instruments to be eligible non-cash collateral. We believe this also will relieve cash liquidity pressure on our member, and that will help them also to reduce the cost in general. The fifth and last one will be, as my colleague, the Chief Strategy Officer, Mr. Lee, mentioned, that our aim is to go globally. For Muqassa, we are taking this very seriously, and we already started exploring the opportunity outside the kingdom, where we will be working to clear instruments traded in other exchanges. We already started by signing MOUs with entities on the region, and we are working very closely with them to explore the opportunity to develop clearing services at their markets and develop in general the capital markets of all those entities in the region.
Raed, every day we hear about new technology, new trend. What sort of trends are you watching in the post-trade landscape?
So I think definitely observing the trends is what gives us the opportunities and how we should move and where actually to be the direction of us. And I think the first trend will definitely be globalization of market. And I think this has been covered several times in the panel and also in the two questions. For depository center in general, I think one of the major trends is looking into different types of assets that you can provide central registrar for and provide additional services to. And I think while today at IDA, we definitely have a lot of services to do for the equity as a central registrar for the Saudi market, but I think looking into what other deposit center has been doing, there is a potential and opportunity for IDA as well to look into other type of assets. I'll give a very good brief example for something that we have already started this year. Our first steps with is looking into registering private fund that has been offered in a private placement. And I think this is a start for IDA to look into other type of asset to register. And today, we're also looking into the visibility of what else we can do for the fund management industry, whether these are fund administration, whether these are registration, and we're looking into the visibility study in all of these aspects to add value for the registrar as IDA and also to the fund management industry in Saudi Arabia. And hopefully for a longer term, this is something that could also be linked with another market or an international market of fund administration, but we definitely want to check the visibility and take things step by step. Also, of course, there are other type of assets that could be a potential for registration and asset services, similar to other type of debt or securitized instruments that we also looking into, and how can we capture a new type of assets. Of course, if you want to talk about a new type of assets, I think that there is no actually limitation for that, but what we want to do is explore what could add value for Tadawul and the Saudi capital market. I think there is also another trend, which is we're working with our colleagues in Muqasa as well, is looking into the collateral management services. And I think today, if we want to be global, we want to make sure that our services also is at a global standard. This is something that we're also exploring. We want to introduce it for the local market in the coming few years. And hopefully, with the linkages of other markets, this collateral could be used in several markets as well. I think these are the major trends that from the Deposit Center. And you did mention about technology, and I think the trend in technology has been the distributed ledger technologies, blockchains, and all of this. And I would say that within the IDA and the STG, we're definitely watching for new technology. We want to make sure that we're also up to date. The lesson that you have learned from other markets is actually, it's not only about the technology, it's about the maturity of the technology and all the stakeholders. Because if we want to create a market with a new technology, you want to make sure that the adoption from all stakeholders are ready at the same time. Otherwise, if something comes before the others, there will not be actually a liquidity or a venue for trades and buyer and seller. However, I think these new technologies has definitely a huge potential for us to look into. And I think it will be a great opportunity if there is a new type of asset and a new type of member that we could look into jumping in this technology, being opportunistic about it.
Well, you'd like to add something?
Yes, I will address it from two angles. The first one is what is the trend in the clearing space. I would say for sure the interoperability is the trends on the clearing space, which is the cross linkages between two or more CCBs. This interoperability will help market participants to consolidate their settlement and clearing obligation into one CCB, regardless of the trading venue trade is executed. And this for sure will make it more efficient for the capital allocation of those CCBs or of those market participants, and eventually will reduce the cost on the market participants. This is the biggest trends on the clearing space. Talking about the technology advancements on the clearing space, whether this technology related to artificial intelligence, distributed ledger technologies, or cryptocurrencies, or all of these, and the blockchain, all of these technology, for sure, it's something that the CCB around the world are looking very, very close to those technology and the advancement of this technology, as some of these technology for sure will reduce the risk or manage better the risk, but also at the same time, it will introduce new type of risk that CCB will require to reevaluate and ensure that all of these technology as the core, I would say, role of the CCB is to manage better the risk, is to make sure those technology, when it's used by CCBs, to be managed in a proper way, not to expose the CCB or market participants or in general the markets to new type of risks. But this is definitely something CCB as well as Muqasa will always look very close. And maybe I will conclude with also what are the CCP globally working on as a result of being a global, that extending their clearing and managing the risk of the clearing to be at a broader scale beyond their local markets. That is something definitely we will look very soon, that ECB extending their clearing in other markets. As these capital markets connect further, I think the ECB also forced to follow that trend by ensuring that the risk will be managed better, even if out of their capital markets they are normally working on.
I think we're out of time, but there's one last topic that I don't want to miss, which is the most important investment we all do, and the Kingdom is focusing on, which are the human capital. In 20 seconds each, tell me more about it.
So I think just to make it sure, while we rely a lot on technology, I think the people behind the technology is what really matters. This is a new field that we definitely need to look into the right talent to hire and retain as well. I think what is really, really important is to have the mix of both, the international experience with the long years that has been done with the Saudi young talent, and have that know-how transferred for them. I think this is the way to do it.
Yeah, I'll echo my colleague. I think human capital is the key success factor for our transformation. Hiring, developing, and returning will be the most critical aspect of our strategy at the group and the financial markets.
So let's summarize this. The future of post-trade infrastructure is more visible now, and failure is just not an option. Thank you so much to my panelists. Thank you to the audience, and I wish you a very good year ahead.
Thank you very much.
Thank you, Mariam. Thank you, gentlemen. Thank you for making what can be a very dry subject, post-trade, into a great and energetic start to our afternoon. We're now going to go to our next presentation, and it is my great pleasure to welcome Eli Jaja, who is the Head of Equity Derivative Solutions for MENA at HSBC, who's going to talk to us about stock options. So Eli, please join us on the stage. Please welcome Eli to the stage.
Good afternoon, ladies and gentlemen. Thank you for attending this session where we'll be covering derivatives and mainly options, which are the basic building blocks for what we call structured solutions. First, let me I want to give a big thank you to Tadawul for organizing this great event. It's a real pleasure for me and for HSBC to take part of this willingness of Saudi to build the future of capital market today. Before talking about the future, let's go back a few years ago to see what were yesterday's next steps and what was happening. Back then, work has already started. On the primary side, Aramco, end of 2019, opened the new era of the Saudi IPO, and it was followed by an ambitious agenda on the IPO. This was on the primary side. On the secondary side, the focus was on index inclusion, where Saudi market was integrated in two main global emerging market indices, which are the MSCI and the FTSE in 2019 and 2020. So what is the picture today? Today, on the IPO side, on the primary market, if you exclude, of course, the elephant IPO of Aramco and the COVID period, the yearly figures on the IPO, which are the offer values in terms of offer value, have been multiplied by 6. This is on the primary side. On the secondary side, the number of transactions executed on Tadawul was multiplied by 3.5, and the value of the market capital have been multiplied by 5. And this was due to the passive inflows resulting from the index inclusion and the increased interest of local and foreign investors in Saudi market. Let's understand what was happening back then. Back then, we were trying to build large, we were trying to be attractive, and we were trying to bring the flow, which was the case, in fact. It was a successful journey, and we managed to bring the flow on the cash equity side. So we were trying to build capacity. Now, once we have the flow here, we need to ask the question to ourselves, is capacity enough? Imagine that we have all this flow of cars, but we don't have the decent insurance policies to go with it, or the mechanical maintenance to go with it, or the financial services to finance all the buying of the cars. Will capacity be enough? If the answer is no, then what needs to be built? What we need to target next is to be targeting efficiency. If you are concerned about accidents, I need to provide you with protection via insurance policies. If you don't have enough liquidity to buy a car, I need to provide you with financial services to be able to borrow money to buy a car. If you don't want to buy a car but still want to enjoy a car for the moment that you want, I need to provide you the facility to rent a car. No worry, you are not in the wrong forum. We will not continue about the car. If you want to go back to the equity market and we will talk about efficiency, what we need to develop. To have an efficient capital market on the equity side, we need 3 pillars. We need a functional execution on the cash side, which is already the case. It's functioning perfectly well. We need a functional SBL market, share borrowing and lending, which is in its baby steps, but it is operational. And we as HSBC are well positioned to witness this because we have participated in the first transaction of the SBL in Saudi. And the third pillar, which is missing or we are trying to build, is the derivatives. So we need these 3 pillars to have an efficient market. And on the listed side, when we talk about derivatives, it's mainly futures and options. So we know what to build. Why? We have the cash equity market that we managed to make it bigger. We have the SBL. Why having the derivative will help us to have an efficient capital market on the equity side? Because having all the 3 will unlock a full package of financial services that will make the equity capital market efficient. So we know the what, the why, how these futures and options or derivatives can help go to this efficiency. Of course, I will not have a lot of time. In 5 minutes, it will be so difficult to go into deep details, else I will lose my 15 years job if I can cover all this in 5 minutes. But we will cover some of the use cases. On the financing side, using futures, you can replicate a buying position on the equity without using your money. And all the cash flows will come at maturity. You will receive money if the market If you gain, you will pay money if you lose, but all happens at maturity. So it is like a financing solution. On the leverage side, using futures, since you don't use your money to buy a stock, you can use it as a collateral to manage the margin calls. So if you have this amount of money, you can build a position or take exposure to a bigger notional or bigger size, hence the leverage effect. Same thing, using the options, since the option price is cheaper than the underlying equity, if you have an amount of money, you can buy more quantity on the options than the quantity you can buy on the share itself. Hence, again, the leverage effect. And this, of course, goes without saying that you accept to take a higher risk. So this was on the financing and the leveraging. What about the hedging, the protection? In 2022, we saw that volatility has came back to the market. We saw that the market can go up, but we saw that the market can go down. If you are worried about the downside of the market, using futures, you can have full protection on the downside of the market by sacrificing the upside, any potential gain that you gain on the upside. Using options, put spread, or other option strategies, you can get a full or partial protection on the downside of the market, and by paying a premium, it's like an insurance policy. Enhance the borrowing capacity. Companies and financial institutions can use their equity portfolio to borrow cash. Having said so, the value of the equity portfolio is directly linked to the borrowing capacity. A stable equity portfolio equals a stable borrowing capacity. Using future, you can lock the value of your equity portfolio, and then you can secure your borrowing capacity. Using collars, which are strategies based on options, you can secure roughly your equity value of the portfolio, that it will fluctuate only between two figures, a cap figure and a floor figure. So accepting maximum loss while accepting a maximum gain, hence you will stabilize your borrowing capacity. Having the possibility to take a directional investment. You agree that when you buy a stock, implicitly you take position on both sides of the market. You will gain money on the upside, but you will lose money on the downside. Using the option, you can have the feature to choose to have a directional on only one side of the market. If you have a bullish view, you buy a call and you gain money on the upside. If you have a bearish view, you buy a put and you gain money on the downside. And your loss is limited on the premium, on the price you pay on the option. But at least you have the choice to take position on only one side of the market. Yield enhancement. In an environment where inflation is very high, many investors and asset managers are concerned about their returns and are looking for extra yield. What you need to know is that volatility is a main driver of the price of the option. High volatility, you have a high price for the option. If you are in an environment where volatility is high and you don't find that it's a good timing to buy the option, maybe it can be a good timing to sell the option. If you have a bullish view on the market, you sell the put. If you have a bearish view on the market, you sell a call. And by accepting some equity risk on your portfolio, you can generate some extra yield, which is the premium of the option. We can go on and go on and go on. But the message is that, to repeat, if you have a cash equity market with an SBL, functioning SBL market, with the layer of the derivative, it can unlock all these financial services needed for an efficient capital market. Having said so, let's have a look to Tadawul's agenda. On the future side, in 2020 and 2020, Tadawul listed its first futures on the index. 2022, first listing of futures on single shares. On the option side, we've heard it several times this morning that it is on Tadawul's agenda to list some options on single shares. And since market making is needed to bring more liquidity and volume to the market, last year Tadawul published the rule book to market make on futures on index, and this year Tadawul is expected to publish rule book to do market making on listed options and futures and single stock. Now let's have a look to what's happening elsewhere in the world. If we take some stock exchanges on some emerging markets, Brazil, India, South Africa, and Turkey, knowing that Turkey relatively had joined lately the listed options market, and here we are showing the yearly volumes in terms of number of contracts traded on a yearly basis. Clearly, on all these markets, we can see either an increasing trend or at least that the volumes traded nowadays are much higher than the volumes traded in the past. And this is another confirmation that these options or solutions are becoming more and more known and popular, and the usage is confirmed. So we covered the what, the why, the how. Now here comes the who. Who do we need to have this successful journey on the derivatives? Well, we need the exchange, we need the regulator, we need the financial institutions, and we need the investors. So in summary, we need all of us to participate in this journey. Why? Because a collaboration and open dialogue between all these stakeholders is the best guarantee to have a best implementation for this solution. Regulation is needed as well to guarantee discipline in the practices and to guarantee a good monitoring. Communication. We need to raise awareness among investors that these solutions do exist on the market. We need education to raise awareness among our investors on how to use properly these solutions. So this was the how. Now to summarize, what we are trying or we need or the will to build, what has been built in the past on the cash equity side, the same efforts now needs to be done on the derivative side. Now the question is when? When will we see the flow? I wish if I have the answer, but what I know is that with a functioning SBL market and with engaged market-making members, it is a question of time because we are on the good track, and it's just a question of time before we see that today's initiatives will become tomorrow's reality. Thank you.
Eddie, thank you very much. I thought that was absolutely fantastic. I learned more about equity derivatives in 20 minutes than I had learned in the last 20 years. Very, very clear, and I hope that'll be on the website shortly. Now, because this is a real-time event, we are having a little bit of a change of schedule. We're going to have a break now for about 25 minutes, and then at 3:30, there will be a signing of the MOU with one of the ministers, and then we will start track 2, which is ESG. So, if you could join us back here in about 25 minutes, maybe a little bit before, that would be great, and I'll see you then. Thank you very much.
Sessions are live. Sessions are live.
Ladies and gentlemen, welcome back. We will now witness a trilateral MOU signing with Saudi Exchange, Ministry of Economy and Planning, and Capital Market Authority. Another step for the Saudi capital market moving forward on ESG and advancing its commitment to sustainability. Please join me in welcoming His Excellency Mr. Faisal Ibrahim, Minister of Economy and Planning, His Excellency Mr. Mohammed Al-Gwaiz, Chairman of the Capital Market Authority, and Engineer Khalid Al-Hassan, Chairman of the Saudi Exchange. As you can see, ladies and gentlemen, they're about to sign a trilateral MOU that will advance the development of ESG in the Kingdom of Saudi Arabia. Thank you, Your Excellencies. As part of Vision 2030, Saudi Arabia aims to become a truly global nation with a sustainable financial growth and ecosystem that connects opportunities in the Middle East with businesses and investors in the rest of the world. Next up, Saudi Tadawul Group will be welcoming a number of global counterparts to the stage to sign memorandums of understanding, paving the way for international expansion and cross-listings. I would like to welcome again Engineer Khalid Al-Hassan, CEO of Saudi Tadawul Group, and Mr. Rami Dukani, Executive Chairman of Egyptian Exchange, to sign a memorandum of understanding. Welcome, Mr. Rami. This MOU will foster the exchange of information and development of both capital markets. Thank you, Mr. Rami, for joining us. And now I would like to invite Mr. Abdulaziz Al-Imadi, Acting CEO of the Qatar Stock Exchange, to join Engineer Khalid Al-Hassan on stage to sign the MOU. Welcome, Mr. Abdulaziz. This MOU will help both exchanges develop across fields of fintech, exchange data, and research. Thank you, Mr. Abdulaziz, for joining us on stage. And now I'd like to invite Mr. Mani Al-Khamsan, General Manager of the Financial Academy, to join Engineer Khalid on stage. A new partnership to develop local talent and equip them with the skills, knowledge, and expertise. Thank you, Mr. Mani, for joining us. And thank you also, Engineer Khalid, for being with us. And to conclude, I would like to welcome onto the stage Mr. Naif Al-Adil, Chief of Listings at the Saudi Exchange, and Mr. Paul Diwin, Head of Global Sales and Origination of the Singapore Exchange, to join us both on stage. A new partnership that will see greater collaboration between two dynamic capital markets in the Middle East and the Far East. Thank you, Mr. Naif. Thank you, Mr. Paul Diwin, for joining us. Ladies and gentlemen, in December, the Saudi Exchange launched a market-making framework for the equity and derivatives markets, an important step in the development of the Saudi capital market. Next, I would like to welcome Mr. Mohammed Al-Rameh, CEO of the Saudi Exchange. Welcome to the stage, Mr. Mohammed. He will sign with a series of partners. And therefore, I would like to welcome Mr. Raed Al-Barakati, Deputy CEO of Riyadh Capital, on stage to join Mr. Mohammed. Thank you. Thank you, Mr. Raed, for joining us. Now I would like to welcome Mr. Lu'ayba Faqih, Head of Securities, SMB Capital, to the stage to join Mr. Mohammed Al-Rameh. for joining us. Next, I would like to invite Mr. Walid Al-Hmed, the CEO of Al-Rajhi Capital, to join Mr. Mohammed Al-Rameh on stage. Thank you, Mr. Walid. And finally, I would like to welcome onto the stage Mr. Mohammed Al-Shammasi, the CEO of Diraya, to join Mr. Mohammed Al-Rameh on stage. Thank you both, Mr. Mohammed Al-Shammasi and Mr. Mohammed Al-Rameh, for your presence. Ladies and gentlemen, now I will hand over to Richard Banks to introduce track 2 of the Saudi Capital Market 2023. To you, Richard, to introduce this interesting track, ESG, a push that will reshape the future of investment.
What is it? The thing that you don't like about me?
It was a word you used.
Okay, can we put the music down, please? Thank you. Okay, so thank you, ladies and gentlemen, me again. Just to say that we were having a little rethink, and we think thematically it's best to run the ESG series track as a whole track, and therefore we have asked, and she has accepted, that Her Excellency bring her interview forward. So we are now going to go straight into the interview between Her Excellency Hala Al-Tuwaijri, who is the head of the Saudi Human Rights Commission, who will be interviewed by my colleague Widad Taleb. Widad, Your Excellency, please join us on the stage, and thank you. And let's have some applause, come on.
Good afternoon, ladies and gentlemen, and thank you so much for being here with us today. Your Excellency, Mrs. Hala, thank you so much for joining us here today. When we're talking about the social and governance part of ESGs, we're talking mainly about a human factor. We're talking employee satisfaction and rights, we're talking gender parity, we're talking women in the workplace. This is a subject I hold very dearly to my heart because this aspect provides a proper social infrastructure to build a strong economy. Can we get like a general idea on what is Saudi Arabia doing? Because what I learned is that there's a great deal of work being done to help in other developing countries besides inside the kingdom. So can you walk us through that?
Thank you very much for that, and it's my pleasure to be here today to address this very important issue, which finally is being addressed within contexts like this, whether we acknowledge that or not. Whenever we're talking about investment or even if it's the capital market, eventually we're talking about people. And it is either affecting people or people are taking part of it. So yes, and the international community has gone so far in implementing many policies and strategies where we see that the human rights aspect is actually being taken care of. And this is why the introduction of the social factor within all the sustainable targets is nowadays probably taking a major lead in all of these discussions. So Saudi Arabia has, like the rest of the world, joined many conventions and treaties, especially those among the conventions of the ILO, International Labour Organization, or others where we focus mainly on guaranteeing that all of these contexts, especially the business contexts, not only adhere to the global rights of people, but also promote them. Right. And one of these aspects is, of course, the issue of women empowerment. We're talking about gender parity. We're talking about equal opportunities for both men and women. We're talking about equal environment, work environments, and so on. And that discussion is actually a very wide one. But for the Kingdom of Saudi Arabia to advance in this file, we had to start actually from the grassroots. We had to look at the legislative system. We had to fix and reform so many issues within our legal system and sometimes come up with new legislations. Right. And because you cannot really think that you will empower women merely by opening up opportunities for them to work in this sector or the other. It's actually, this is the tip of the iceberg. Underneath, you have a whole infrastructure that you need to work on. And this is what the government of Saudi Arabia has done in the past 5 or 6 years, where we've worked on the legal system. And then, not late in this plan, have we also started implementing initiatives. And these initiatives cover a wide area of well, let's say many steps. One of them is to encourage women to join the labor market, but also support them, because whether we like to admit that or not, women are the main providers of care in their families. So if we want women to advance in their careers, we also need to provide them with services like childcare services, even transportation services, and other kinds of alternatives where we grant the women this opportunity. So it's actually a huge file, but we're very happy to see that this discussion nowadays is being addressed in such forums and contexts, because finally the world has realized that all of these venues and all of these sectors deal with people, and if you don't grant people their rights, and if you don't give them incentives, then you have very little opportunity for advancement. And we've seen that shift also existing in international organizations. Nowadays, what you hear the most from the World Bank or IMF or other entities is more about the people. What are you doing for the people? And this is music to our ears, of course, in the human rights.
You were talking about the latest reforms that have been taking place for the past 5 to 6 years, particularly since 2017. Mm-hmm. Have we reached the peak of those reforms? What do you expect in the coming period?
If you're talking about peaks of the impact or the outcomes, not yet, definitely. But if you're talking about, for example, the legal aspect is all covered. So this is a phase that we can say today that we've reached its peak. But as for the outcomes, it takes time. We're talking about, for example, reaching certain targets in women's participation in the labor market. We've exceeded the target we put for 2030. We wanted to reach 30% by 2030. We're already between 35 and 36 now. So we've exceeded that target. But again, it's a comprehensive kind of reform. And these numbers are indicative of certain aspects of it. But if you talk about the whole file from a comprehensive perspective, I think the impact of it, we will see it coming probably faster than we expect. But that's the plan. I mean, you cannot change an entire system by just changing the laws. And right. you have to see the outcome of that coming. And the good news is that we are actually seeing it, and it's taking a faster pace than we've planned.
Right. You were talking about gender quotas and achieving those quotas. And I want to talk specifically about top positions and roles in Saudi Arabia. They're still male-dominated. So are we going to see more gender quotas in that aspect, or is it going to be purely merit-based and only merit-based?
Okay, now the quota is one school of empowering women, and it has proven to be effective in certain circumstances and proven not to be effective in other circumstances. The case in Saudi Arabia is that we've just opened the certain sectors for women. So basically, what we are concerned about now is more of making sure the pipeline is actually working, where we want to see more women coming into the labor market, private and public. And over the course of 5 years, you don't expect to see many women fighting for leadership positions in that area. So currently, we don't need the quota, because what we are focusing more on is, as I said, the flow of more women into the labor market. But I'll give you an example. In the Shura Council, it started off with a quota immediately from the first day. So we have 20% of the Shura Council women by quota, because it was needed there, the quota system, I mean, the quota mechanism. So we're continuously examining and revisiting all of the measures we're taking, and I don't know, maybe in a couple of years, if we feel the quota is needed, maybe we will fight that battle at that time. But for now, and I would like also to mention that we don't have so much resistance for women's participation, even at leadership positions, especially in the public sector. So we're actually encouraging women and accepting women in leadership positions. So quota is usually used when there is resistance. Currently, we don't have resistance, and we just want more women to join.
Right. So let's talk numbers. The World Bank's Women, Business and Law Report for 2020 ranked Saudi Arabia as the top performer among 190 countries in gender equality. And
for 2 years in a row.
2 years in a row. Okay. And as of December 2020, according to UN Women, only 36.9% of indicators needed to monitor the SDGs from a gender perspective were available, with gaps in areas like the gender pay gap. So can you tell me more about how these numbers are looking like right now, and how the Kingdom is working on providing the right kind of data reporting when it comes to ESG standards?
Definitely. I mean, that's an issue that we have addressed in Saudi Arabia. And we have here the Minister of Economy and Planning, who is responsible for that agreement we had with the United Nations on Sustainable Development Goals, specifically regarding the data collection. Now, I'm not an expert in data, but you know that data is collected in different methods in different schools. And what we're trying to do through this agreement is to kind of have a unified way of collecting data and reflecting what is happening on the ground on the same databases internationally. So it's an issue of translating what we are having. For example, in certain indices, our data is excellent because the method that they use adheres to what we have in Saudi Arabia. And in others, no, we found ourselves lacking and sometimes behind, and it's basically a data issue. So it's a technical issue, let me say. On the ground, if you go to labor market participation, as I said, numbers are good, numbers are improving continuously. For example, in the World Economic Forum, the gender pay gap report 2020, we were among the 3 countries that mostly improved in closing the gap by 3.3 points. Because this also adheres to how we collect the data. So it's an issue, but it's a global issue. We're not the only ones that are struggling from data collection and data reflected on indices.
It's actually one of the challenges.
It's a world challenge, and when we discussed that with the United Nations, they admitted that they do have this problem with most of the countries around the world. So it's an issue that we're addressing. What we care about the most is that we see that we're improving, and we know we can measure ourselves and we can measure how much we're improving, and that those plans we've put for ourselves in our Vision 2030 are numbers that we're reaching and exceeding. Now, how much that is reflected is a battle we're fighting, but inshallah, we're on the right track.
Inshallah. I want to talk more about another important societal segment. So we talked women, who are a huge contributor to the Saudi economy, but there's also the societal segment that is the youth, that are also a huge contributor to the Saudi economy, and they're actually aiding in the growth and expediting that growth. And it also plays a big role in the kingdom's vision and plan to shift away from their oil dependence and to shift more on growing other sectors and getting more investments there. How do you view the youth societal segment in Saudi Arabia? Do you believe that they can achieve this?
They are our hope. You know that they comprise more than 70% between children and the youth of the population. And they are actually the target of all the programs that the vision has introduced. One of them, which is the Human Capabilities Development Program, is directly addressing the youth. It's a huge program that was launched by the Crown Prince himself and chaired by him also. And it's targeting the youth from all aspects, education, also job opportunities, training, all of these put together. And it's such a huge program that's basically addressing how much we want to invest in our youth and children. But also, the same approach we've taken with women empowerment, we've also taken with youth. You have to amend and reform anything you have that's not working well. One of them is the educational system, the curricula, any regulations that you have that will affect negatively the children. And that's why we've issued policies, like, for example, we have a policy for child labor. Although the numbers are not high in child labor in Saudi Arabia, but the message is Saudi Arabia has zero tolerance for child labor. Right. And that's why we issued that policy. Recently also, we've issued the anti-discrimination policy, which looks into any kind of discrimination between men and women or between against people with disability, name it. So all of these aspects are social aspects that we are introducing into the world of investment, a world of business, and definitely investing in the youth. One of the experiments we did is to have a board of young children. It's an advisory board, and they basically are there to validate anything we do for the children in the kingdom. Hopefully that one day you will meet with them. They're one of the most challenging board you'll ever meet.
I would love to.
And yeah, they'll give you a hard time. They just did last week with me. So the idea is to give voice to children and hear them and make sure that what we're doing is actually working for them and they agree on it. And that's a kind of practice that we're encouraging to have across all entities. Right. We want to have a board of young people who would actually participate in the decision-making process.
Mrs. Hala, thank you so much for being with us today. I'm afraid our time is up. Ladies and gentlemen, thank you so much for tuning in.
Thank you.
Thank you so much.
Your Excellency, thank you very much. Widad, thank you as well. If there is anyone who is meant to be on the next panel and who isn't in the speaker area, could you take yourself there? We are going to move now, a little bit delayed, but not too bad, to the second track of the day, which I know a lot of you have been waiting for, which is to talk about ESG. And the track is titled, A Push That Will Reshape the Future of Investment. I would argue that ESG is no longer an option, but is a necessity for every industry, not just our industry of finance. ESG, certainly in markets in Europe and increasingly in the US and Asia, is being foundationally integrated into investment and policy frameworks across the world. This region, not particularly Saudi, but this region generally has been a little bit behind. But I think from what you will hear in the next hour or so, you will see, that it is very much intending to catch up and if not supersede its peers in other global markets. With a growing number of consumers and investors subscribing at least to the principles of ESG, we now need to answer some difficult questions. How do we consistently and sustainably protect the environment, champion society, and improve our governance? How do we actually deliver on these aspirational goals? And so, to answer these questions and many more, we'll have, and I'd like to introduce the host of the next panel, Widad Taleb, Senior Energy Correspondent at CNN Business Arabic. You've already had Widad briefly before, and she is going to discuss ways to deliver ESG with panelists from MSCI, S&P Global, SABIC, Aqua Power, and Sustainability Excellence. So, Widad, it's all yours.
Thank you again, ladies and gentlemen, for tuning in. I would like to start off by saying that it has been apparent that ESGs have gained great importance and attention. They stand for environment, social, and governance. It's what experts call a framework that institutions should follow to be able to attract investments. And everyone is taking important steps in that direction. We know that Tadawul has disclosed its ESG frameworks, and they have been centralized across the GCC. So we're going to try to cover this topic extensively here today. I would like to introduce the speakers. We've got Mr. John Maurice Ladure, Managing Director and Head of Index Solution Research at MSCI. We've got Mr. Darren Rovere, the founder and CEO of Sustainability Excellence. Next to him is Mr. Iyad Al-Garawi, General Secretary and Board and Investor Relations Officer and SABIC. And then we have Mr. Abdul Hamid Al-Muhaidib, the CFO of Aqua Power. And finally, we have Mr. Andreas Pozovac, Vice President of S&P Intelligence and also the Global Head of ESG and Governance Advisory at S&P Market Intelligence. And I'm going to start with you, Mr. John Maurice. The title of this panel is ESGs being big promises, but how do we really deliver? And I believe that to deliver, we need to get a clear understanding of what ESGs are. And I've read an article published on Morgan Stanley by Mr. Vikram Raju, who's the head of climate investing at Morgan Stanley. And he mentioned that people think ESG requires, and I quote, the pursuit of positive impact or doing good towards the planet or people who need it, but that isn't the case. So what is the case really?
Yeah, good afternoon all, and thanks a lot for the invite. It's great to always be back in the kingdom. So I read the article. Actually, it's a good read. I encourage you to have a look at it too. So as part of my job with my team, we're spending almost all our time with clients designing index solutions. It can be simple things like market cap or factor or sector or thematic. I think over the past 2 or 3 years, I haven't spent a day and a single meeting without discussing about ESG and climate investing. So very significant trend. And you're right, we need to clarify what it implies in terms of investment strategies. And I think we can identify 3 approaches to ESG investing. The first one, which you already mentioned, which is impact, is definitely a good one. That's where you want to invest to make good to the planet and to the people. So nothing against this one. First tick. The second one, you will actually all be very familiar with here in the region, because you are basically the precursor of what I would call values-based investing. That's where basically you have some belief, maybe religious, maybe ethical belief, and you will want to avoid investing in some business. So this is what you're doing with Islamic and Sharia investing. Right. The third one, which is a bit more sophisticated, is where you really want to integrate those ESG criteria in your overall investment process. From the very beginning, the objectives, the way you implement it, the way you risk manage it, the way you monitor, engage, and ultimately report. And this one is of particular interest, especially for the very large institutional investor of the world. Some of the ones who really want also to invest here in Saudi. And for them it's critical because they've got also this fiduciary duty to their investor to make sure that they are very careful in the risk-return trade-off. And in this context, the financial materiality of looking at ESG is critical. And that's where MSCI, we've got over 300 analysts just focusing on ESG and climate. We're trying to help. We're looking at the global governance of those companies, and then industry by industry, we will start to look at, okay, what are the key issues on environmental and on a social element? Because, in the example of water stress, it won't have the same impact for an energy, utility, or a mining company where it can be quite important, while for a financial or tech company it's not that important. So ultimately, you need to know within each of the industry what are the risks you're exposed to, which company are managing them best, and then it's allowing you to have leaders and laggards. I heard some previous comments. I think in the energy sector, we will have laggards and leaders, the same way we have it in the pharma or other sectors. So it's kind of more a best-in-class approach. The final point, if I may, to finish on this financial materiality, we did a lot of analysis based on this data to find the channel of transmission to real financial behaviors. And we don't only find correlation, but we find causality. i.e. the company which have better ESG rating, they tend to be more profitable, less risky in terms of stock specific, and less risky in terms of systematic risk. So obviously that's a critical element for financial investors.
Right. Thank you, Jean-Maurice. Darren, when we talk about looking after the environmental aspect of ESGs, we talk about carbon footprints, lowering carbon emissions, more green energy and net zero. And knowing that people are turning more towards green energy, governments have increased spending on green energy investment support up to $1.2 trillion end of last year, quarter four of last year. That's according to the IEA. But I want to talk practically now, because this is good on the long term, but what about right now? How are green investments and energy transitions feasible?
Well, excuse me, and thank you. In terms of feasibility, in terms of the practical implementation, I'm going to let my colleagues from SABIC and Aquapower talk about that, because what they're doing and the pace at which they're doing it is quite spectacular, really. I'll talk about the feasibility more broadly, which is when I get asked about feasibility and climate, it's about, can the world meet its climate objectives? And broadly speaking, the world is undergoing man-made climate change, which is going to cause serious and really unpredictable financial costs and economic and social costs as well. And so the world has collectively, broadly agreed that it needs to work towards managing this climate challenge, and to do so requires being net zero in terms of carbon emissions by 2050, and even more aggressively, to stay on that trajectory, reduce carbon emissions, atmospheric carbon emissions, by 45% by 2030. So imagine that if you're in the capital markets, 45% reduction in carbon emissions in the atmosphere in 7 years. Now, are these things feasible and possible? Well, PIF has already committed to being net zero by 2050, so that's that marker, and other companies in Saudi as well, and other Saudi commitments. But then the question becomes, how aggressively can you get there? And to do that then requires a couple of things. One is, again, from a market perspective, you need to price it in. You need to get markets, financial markets, aligned with sustainable development. We'd like to think that financial markets are efficient, but they're truly inefficient in this respect. Imagine all of our society, all of our markets rely on the Earth's ecological systems and the climate, and we price it at almost zero. We wouldn't do that for human resources. We wouldn't say, oh, let's just forget about that, not count it, or other physical inputs. So we just have to factor it in and then let the market do its thing. And that's partly the angle of the comments from Aramco this morning, where there's not necessarily one solution here, but what we need to do is reduce carbon emissions. And if we can, let's say, create a market that aims to do that, we can find many solutions to that. So put a price on carbon, and you say, well, will that happen in this market? Actually, PIF and Tadawul just launched a regional voluntary carbon market, which I think we're going to hear more from today, which does that. It starts putting a price on carbon and starts making carbon part of the everyday marketplace here in Saudi. So that's one thing, and that leads to the next thing, which is you need to have overwhelmingly clear signals in the market that the market is going to head this way so business can invest that way. And again, we see massive market signals here. You have the Vision 2030, which is, a clear sustainable development plan. This is what it is. And so businesses know that government is investing in sustainable development. On the environment and climate front, more specifically, you have also, in addition to that, the Saudi Green Initiative, which says we are going to invest aggressively in renewables, we're going to invest aggressively in nature-based solutions, and we're going to invest aggressively in a circular carbon economy. And these things collectively is how we are going to win economically and develop even stronger economic competitiveness globally while helping the world address its climate challenge. So that's the argument, and I think it's a reasonable approach. I mean, this is about national competitiveness. I think, and we've already, like I said, seen PIF's commitment to this. We've seen the voluntary carbon market. You see Saudi banks offering green bonds, green sukuks, and these kinds of things being issued, sustainability linked finance. So all of this is starting to price sustainability into the market, align markets with sustainability. And I think, Saudi has the economic imperative to win at this. It has the ambition, it has the resources, it has a pace of change that no other market in the world has right now. So I think it has a very good chance of both making a major contribution to the world's climate challenge, emerging from it with even stronger economic competitiveness, and becoming even more of a financial hub in the process.
Thank you, Mr. Darren. Mr. Iyad, from that point, we know that the kingdom has big plans to go green in its 2030 vision. And we know that SABIC has been taking important steps towards being more renewable and towards eco-friendliness. Can you walk us through what recycling or green initiatives SABIC is looking at implementing in the near future to downsize the negative outputs of these industries?
First of all, thank you, Wadad, and I'm glad to be here with you today among my peer panelists. Your question is excellent one. It drives always the negative imperative of the industry's implication. So I'll address this in three fronts. The first one is that the impact or the negative impact of the industry at large globally is less than 5% of carbon emissions that you would think compared to other industries, whether it's power or transportation. So the starting point is perception. It's less than 5%. The second one is the positive benefits out of the industry. It is a necessity to have the chemicals industry at large. So you would be thinking about the lifestyle that we live in transportation, in aviation. We cannot live with the day-to-day applications that we have, whether in plastics or in chemicals, even in the transition of energy. Renewables and aqua power will be shedding more light now, but using materials that the industry is producing. The third one, which is most important, recognizing that, yes, probably it's relatively lower than others, but the industry in general is doing a lot. It's committed to carbon neutrality by 2050 and 2060. And if I zoom down to what SABIC is doing, probably I'll give good examples of what we've done in the past, because there are a lot of people who are talking about future plans. So we have the biggest carbon dioxide capture in the world. It's an existing plant since 2015 in Jubail here in the kingdom. So this is already happening. As you've indicated, it does make economic sense, and also it adds value to the environment. The second example is the Ministry of Energy here in the kingdom have introduced since 2011 a program to reduce intensity and the use basically of hydrocarbons. The program is the Saudi, the SEEC, the Saudi Energy Efficiency Program. And basically it's a mandatory program on producers here in the kingdom. And this has mandated reduction of use of hydrocarbons. Again, it makes sense economically, but also it reduces the carbon intensity. Since 2011 up to 2019, in SABIC, we've reduced carbon intensity by 15%. Going forward, we're committed to carbon neutrality. Not only that, but also we're committed to reducing our carbon emissions by 20% by 2030. And to your point again, we have solid plans. It's part of our capital program. We've committed capital from our board to really undergo all the programs to reduce by 20%. So in total, to your point, definitely it is a challenge. The industry is doing quite a lot in order to address the environmental challenge, but it is really a collective effort by all industries.
Right. Thank you, Mr. Iyad. Mr. Abdelhamid, I want to look at how ESG investments are looking like for this region in the world. I've spoken to many industry pioneers in the region, people in Abu Dhabi, people in Riyadh. I've also spoken to the Minister of Industry and Mineral Resources, His Excellency Bandar Al Khurayf, and he told me that they're going to be focusing a lot on ESGs, and especially on investments regarding new technologies that are sustainable. What are the steps that Aqua Power are taking to better ensure sustainability and to better ensure the phase of energy transition in all its aspects?
Thank you very much for the question, and it's a pleasure to join the panel in this topic. So to answer your question, I will break it into three main buckets where we will cover the ESG transitioning. The first bucket is related to the renewable portfolio. So if I recall, a decade ago, we have started with the zero generation when it comes to the renewable. Today, 40% of our portfolio is already in the renewable part. Today we are around 44 gigawatts, so almost 40% of that is already renewable. This gives you a reflection on how much this region, and specifically Saudi Arabia, has moved in the renewable part. Today we are the largest renewable portfolio company here in the region. Aside from that, also we are leading a big translation to the energy transition within the region, we have been able to continuously drive the price down. We have been the cost leadership and taking different technologies into a new record. We are talking about photovoltaic projects that used to be 10 years ago at a price more than double digit. Today, we are delivering them at 2 to 3 cents per kilowatt hour. CSP technology, we have been able, together with our partner in Dubai, to bring it down to 7.3 cents per kilowatt hour. Also other technologies, including wind, that we are bringing it to a new record. So overall, we are, as a cost leadership point of view, we are driving the whole economy and the whole region to a new portfolio of renewable targets. The second component is related to decarbonization strategy. So we have been able also to decommission some of our old assets that depend on specifically heavy crude oil. We have exited last year completely all the coal assets. And we are taking a journey whereby 2030 we will be only having both renewable together with gas as a transitioning oil for us in the future. And finally, having an exact and ESG framework agreement and targets with metrics. So what we are doing exactly today, that we have seen what is our carbon footprint in 2020, and we said by 2030 we will need to be half of that. And then by 2050, we will be net zero target. So we have made a clear target for us by 2050 and 2030, and we want to ensure through metrics on a yearly basis how we will be able to achieve that. So these are the three main components that we are taking as a commitment for us on the ESG journey.
Thank you, Mr. Abdelhamid. I mean, the definition of ESGs could get a bit tricky, and I want to go back to what Mr. Jean-Maurice was explaining earlier. Mr. Andreas, from that point, I kind of want to dig in and ask, why do some people think that ESGs are far from what Mr. Jean-Maurice just explained? Do we still think that there isn't a unified or centralized understanding of what ESGs are? Because I think that's imperative to its application in a fast pace.
Yeah, thank you. And I think that's a very good question, because we definitely don't have a standardized or uniform definition of what ESG actually is. We all talk about ESG, but if I would ask anyone in the room here, how do you define ESG for yourself and for your company, we probably get hundreds of different answers. And that's a little bit the issue that we're dealing here, because we're talking about ESG like it is a thing. People start to do ESG now, but in essence, ESG has been there before. It's actually should be part of your day-to-day, whether you manage a company, whether you govern it, whether you communicate, whether you are in strategy, risk, etc. It's just taking into consideration and manage the appropriate risks and opportunities that exist within any one business. So ESG has gotten this label, and it's this big market and opportunity now. But in essence, it should be part of a strategy. So I like to just substitute ESG with strategy, and then really look at how that is for you as an individual company, etc. So I think it gets confused a lot also with pure reporting or transparency, right? And I think people globally have to realize that from a capital markets perspective, transparency is just one part of the whole sustainability concepts to allow to compare companies between each other within the industry and outside, within the region and outside of the region, so that from an investor perspective, you understand if a company is actually aware of their risks and opportunities, but also has a plan on how to manage them, etc. And for that, we have all this discussion about the frameworks that exist out there, and there are numerous and plenty of them, but there is a conversion, right, globally to get some sort of standardized framework that achieves a minimum baseline that allows companies to be compared by the capital markets, whether this is the ISB, whether this is in Europe, the EFRAG, etc. But I think it's important to understand that this is just one part of the equation, data availability, reporting, but it doesn't stop with financial PR around the sustainability report. It needs to be top-down from a strategy perspective on how do you actually govern this, and also in a forward-looking way. Because, and I want to stop with that, a lot of times I'm hearing about all of the risks in relation to ESG and the compliance approach to regulation, but in effect, and especially for companies in this region here, this is a huge opportunity as well. So sometimes that's a little bit forgotten, but I think also in the context of what we've heard here today, this may be good for a mindset shift that you can get a lot out of sustainability and proactive management of those risks and opportunities.
Thank you, Mr. Andreas. Mr. John, I want to come back to you and ask, he was talking about data reporting and its importance, and you've got plenty of data and indexes. Are investors on the right track with ESGs right now? And what is the impact of ESGs on the cost of capital?
Yeah, what I say usually talking with our clients is ESG investing is a journey. You need to start and then you will refine it and progress further. And the first start is actually the commitment. And I think this commitment has now been made. And actually last night I was looking at the UN POI latest update. Now you've got over 5,000 financial institutions having signed the POI. They are controlling $120 trillion of AUM. So, they will definitely start to put this. And I think this is what we are now starting to see is moving from a signature on the bottom of a page to really implementing with trillions of dollars. So I think it's a critical moment as we speak. We can see that ESG is financially material. When now a company has an ESG incident, you can easily see a loss of 20, 40, sometimes even 70% of their market cap in a matter of few weeks. So it's really significant. The data is improving further. I think we're getting to a good state. Regulators are definitely pushing in the same direction, so investors are ready to act. And anecdotally, we can see it, for example, on the ETF market, where things are a bit more transparent. Over the last 3 years, you've had kind of year-on-year growth of AUM, so around 50%, 50, every year. On the overall flows of equity, more and more percentage are going into ESG ETFs.
Right.
So this is happening. And I think we talked about investors, we talked about regulators. I think the corporates, as we see and we discuss, are really paying a lot of attention. I mentioned the research we've done on the financial materiality. We did also some research on the cost of capital. There's a flow of capital, there's a cost of capital. The companies which are in the top 20% in terms of ESG compared to the one at the bottom, they usually have a cost of capital in developed markets is around 40 basis points lower for the best compared to the worst. In emerging markets, it's almost double this, around 80 basis points. So this is very, very significant for corporates. And we can see this. Now they are interacting a lot more with us in developed markets. We've got now 80% of the large companies, interacting in 2022 with us. Emerging market is a bit behind. It's still kind of just short of 50%. But, a few years ago, we were at 10%. So I think it's really very clear. And we try to help those corporates in terms of disclosure, identifying the gap potentially, and also doing this peer comparison. As I mentioned, there is also a lot of assessments which is within an industry, because you don't necessarily form an absolute ranking of the pharma stocks are better than the energy stocks. No, it's within the industry which are the best.
Right. I want to kind of just jump back to what Mr. Andreas was saying about a unified understanding of ESGs. When we're talking about data collection, how can companies ensure that this data is efficient and reliable? Because to many, it could get really confusing. Some even confuse ESGs to CSRs, for example. Can you walk us through that?
I guess I would say I don't think it has to be confusing. I can see how if you look at the whole set of standards and stuff that are out there, people can get concerned. But if you go to the last part of your point is if you focus on what's the business case for my company, then you get a lot of clarity pretty quickly and you can focus first and foremost on that. But I mean, we've worked, there's been about 30 companies on Tadawul listed companies that have disclosed. We've worked with 3/4 of them. Right. And from what we find is, they just didn't realize that this kind of information was being requested by the market. I mean, now there's more awareness, but they didn't realize that. They didn't realize that it was affecting their cost of borrowing, affecting ability to borrow, affecting, it was just basically helping undervalue the company. And then they look at the list and they say, well, we do that, we do that, we do that. You actually do a lot of it, you just weren't disclosing it. They think somebody made a mistake on the rating, but it's actually because it was just not disclosed. So what we find is, once you see that, you can pretty quickly just jump on it, and there is a lot of variation in the market, but there's a lot of similarity also. So you can hit a vast majority of it very quickly with information you already have. So first of all, it's a very easy win to get started. Now, when you start looking at the standards, okay, there is a lot of standards and guidance and competing views out there, but it's a marketplace, so there's going to be different opinions. But if you want to sort of and get some initial guidance, I mean, the stock exchanges, including Tadawul put its voluntary disclosure, and that's now been harmonized across the region. So that's a starting point. But if you want to look at where do I want to head with this, look to IFRS, because IFRS, basically oversees the world's accounting. And they just created an International Sustainability Standards Board and issued guidance that takes into account 3 or 4 other standards that existed that have all been pulled together under IFRS. And you have to also ask yourself, if IFRS, the world's kind of oversight body for accounting, is saying we need sustainability accounting, that just tells you the market is again shifting towards sustainability. And if I'm in the capital markets, I have to understand what the financial implications of that are. And you talked about some of the numbers around the advantage there. So I would look to the IFRS as probably the most likely where regulations will go over time and accounting will go over time and markets will merge with sustainability. But then the last part of it is, okay, just beyond that, the stick approach and so forth and the standards that are out there, it's what is my business case? So some areas might be more complex, to your point, like carbon tracking, and there's still some disagreement around how that gets tracked and so forth. But again, if you're creating all kinds of market incentives to act on this, voluntary carbon trading markets, national net targets, sovereign wealth funds saying this is the way we want the market to go and we're going to support it through different market mechanisms, this is business's thing. It finds solutions. So as long as the market is asking for that, businesses will find solutions for it. So I see that there's so much market momentum here in support of this that you have a chance of this market outcompeting other markets because of that incentive situation. And the Saudi exchange, Mr. Mohammed from the Saudi exchange said we expect ESG disclosures to double this year by Saudi listed companies. And yeah, why not? I mean, because if you're being undervalued by not putting it out there, and if you're creating competitive advantage for yourself for doing so, as a business, you'll find a way through that. So I think there's enough guidance out there and enough market incentive that you will see a huge increase in the Saudi market in terms of disclosure.
Right. Mr. Iyad, what is your take on what Mr. Darren just described? And I also wanted to kind of dive in and ask you, what is SABIC doing for compliance and governance and practices in order to strengthen their ESG reporting?
Yeah. Probably I'll build a little bit on what you've said. I think the nature of ESG is complex. So it's not like accounting, as you've said. So IFRS, for example, it's consistent of measuring the financial performance of companies in different sectors, no matter what the size of the company is. But ESG, you're talking about social impact. How can you measure social impact and compare 2 different companies in 2 different sectors, in 2 different regions? How can you make this comparison? So by nature, it's difficult. And I know there are lots of agencies and credit rating agencies who are trying to give a stab at it in order really to have a fair comparison between organizations. I know FII, for example, they're doing the inclusive ESG, which is really a tremendous work, which is going to give fair representation, particularly for emerging markets. So drilling down to SABIC, for example, I've talked about the environmental aspects in the previous questions that you've asked, but in the social aspect, SABIC is a social story. The company was created on the back of building industry and industrializing the kingdom, creating jobs. 2 cities were created from the ground 40 plus years ago. So employment and so on, myself is a product of that. I'm a second generation of this social impact that the country has done through SABIC. We have programs that we have right now, Nusamid, which is basically to help in Arabic, to create downstream, to support, not through incentives, but really to give technical support, to give human resources support, and so on for SMEs to grow. Outside the kingdom, SABIC being one of the top employer so far from Saudi in China for 10 consecutive years. I could talk about social, social aspects of what SABIC is doing in governance. I could proudly talk about SABIC, that it implements the Capital Market Authority's regulations, which is really very strong standard compared to global standards, but also we go and look at how our global peers are doing in many aspects, and we do them. And a testimony for that, and also to the success that the kingdom has done, is the direct foreign investments, right? In the Tadawul. In SABIC, it has grown from almost nothing 4 years ago to, you're talking about 7% right now. There is a lot of passive investors, but also there are active investors. 3 years ago, one of the sovereign funds who is very, very particular on ESG aspects, have grilled us in meetings asking about what SABIC is doing in diversity and so on. Guess what? They are investors in SABIC because they've seen how the company is serious, not only having reports and transparency, but really having on the ground programs and implementing them, and they see them every time that we meet up with them.
Right. Mr. Abdul Hamid, I want you to just briefly explain to me how or what steps are Aqua Power taking in order to ensure, like the sustainable aspect of ESGs.
Sure. So I did already cover the, let's say, the E side of it, which is the environment. I would like to emphasize a bit also on the social part of it. Maybe not as big as SABIC.
Social and governance.
We are a bit smaller company compared to SABIC. But in reality, investment with an impact is very important for us. And the impact is mainly social impact. We build these assets for no less than 25 to 30 years in a remote area. So we will make sure that there is a big social impact related to this mega project that we are doing. Localization is very, very important for us when you go to these projects. If you go to Oman, if you go to Morocco, South Africa, you will see locals mainly leading the roles in Aqua Power assets. This is something that is very fundamental for us. We have actually founded an institute, a technology institute called the HIWPT in Saudi, in Rabagh, where we have thousands and thousands of people who have graduated from this institute. And they are not only serving Aqua Power, but also they are serving other assets within the region and internationally. We are really glad to have also international students coming to this institute and graduating, going to work with the other plants in the region. Rehabilitation of the locations that we are in is also an important aspect of it. We have been able to, in Ouarzazate in Morocco, more than 120,000 trees that we have rehab or replant on this region to make sure that not only we are doing and building sustainable renewable project, but we are also addressing the social impact there, and we have also created a women fund for impact with investment to make sure that the region and the villages surrounding our plants are actually also benefiting from the project that we are doing. So big side on the social impact that is very, very relevant and important for us as we are building these projects.
Right. Thank you, Mr. Abdul Hamid. Mr. Andreas, I want you to also briefly explain to me what you think about the ESG integration into the decision-making process and its importance.
ESG integration in the decision-making process. Well, you mean from a capital markets perspective, from an investor perspective?
Right.
Yeah. Well, I think that has quite significantly changed over the last couple of years because especially, my team focuses in between issuers and then the institutional investors for the most part and how they integrate ESG into their decision-making. And I think you've seen a lot of progress and sophistication from that perspective, whether this is on the passive side, like Jean-Maurice explained a little bit, and MSCI, obviously, you would be amazed on how complex this can be to integrate E, S, and G factors into a passive instrument, an index, etc. But I think there's been just a lot of demand, number one, and B, there's more information and data available so that that it goes into the passive side in various forms of integration. But on the active side, I think you see that A, driven by regulation across the globe, that investors are mandated and forced to some degree to integrate E, S, and G to some degree into their decision-making framework, also pushed by their asset owners, so the retirement funds and the pension funds that actually give investment managers their money. But also many, and that has come up also before, understand that if you do it right, you can generate alpha. You can actually, this is a financially material. You can make money by actively integrating ESG the right way. So I think there's been an increase in the level of sophistication from the buy side, definitely. There's definitely a lot of push from the regulators as well. When we look into the data that we have, it's very clear that, you move away from pure exclusion and screening focus, which existed in the past, both for active and for passive, much more to an impact, like you already said, and thematic type of view. Depending on the investor appetite, they are much more granular in their approaches. And one thing, especially internationally, that shouldn't be forgotten is the whole topic of engagement and stewardship. In the past, a lot of investors have decided, okay, if a company has maybe not the best ESG profile, I might divest from it. And actually, this is something that has completely turned around. More and more investors want to generate an impact. They want to influence the company and change and make sure that they are partners along their journey, whether it's decarbonization or other factors on the S and on the G side. So the whole corporate governance aspect of things from an investor perspective is actually probably the biggest trend. We know already for next year that you'll see much more activity from the buy side to understand on how risks are managed. And that's actually, because I reread the title, that's also a huge opportunity, because if a company understands that, then reporting can go in that direction, namely forward-looking and how you might integrate sustainability in your strategy, and then the market can be a great partner actually for you. But I do believe that the more the markets are opening up here as well, we heard increased float and all of that this morning as well, the more the thematic, the impact and the engagement dynamic will become visible here as well, if it isn't already.
Right. Thank you so much, gentlemen, for your time and for your presence on this panel. That's our time for today. And ladies and gentlemen, thank you again for tuning in. Ladies and gentlemen, can I have your attention for just a little bit more time? We're going to be having a series of speakers right now. The first one being Mr. Badr Al-Badr, the CEO of MISC. He's going to be telling us about CSRs, or corporate social responsibilities. And he's going to be giving us a better understanding on how cross-sector partnerships drive the way forward. So he's the CEO of MISC. MISC Foundation is a non-profit organization devoted to cultivate and encourage learning and leadership in the youth for a better future in Saudi Arabia. Please help me welcome Mr. Badr on stage.
السلام عليكم ورحمة الله وبركاته. حياكم الله ومساكم الله بالخير وسعيد أن أكون معكم الليلة. I will be speaking in Arabic, so if you don't speak Arabic, please use your translation. أشكر سوق المالية السعودية على دعوتي للتواجد معكم اليوم، وعلى رأسها رئيس مجلس إدارتها سعادة الأستاذة سارة السحيمي. لعلكم تتساءلون ليش واحد من قطاع غير ربحي جاي يتكلم مع مجموعة من قادة القطاع المالي اللي هو مبني على الربحية. وكجزء من الإجابة على هذا السؤال، أنا في السابق خبرتي في القطاع الربحي وكنت أقود شركة مساهمة عامة لستد في تداول. الجزء الثاني حجيله بعد شوي. في خضم الضغوطات اللي عليكم كلكم، الأوضاع المالية المتقلبة، الأسواق المالية المتذبذبة، الضغوطات من مساهميكم لعوائد أعلى، وعلى حتى موظفيكم تنافسية سوق العمل، في خضم كل المصاعب هذه تجي أيضا عليكم توقعات لا شك، وأنا كنت في مكانكم، إنه وين مساهمتكم الاجتماعية؟ وأنت في كرسيك جالس كرئيس تنفيذي تقول ناقصني بعد مسؤولية اجتماعية مع كل الضغوط هذه، أو تقول أنا قاعد أساهم في المسؤولية الاجتماعية، كيف ممكن أعظم مساهمتي المجتمعية؟ وهذا ما سأتحدث معكم عنه اليوم. أنتم مطالبين بالإنجاز في أعمالكم، ولديكم تحديات وضوابط تتعلق بالحوكمة، ومطالبين أيضاً بالمساهمة في المجتمع. كيف نوازن بين كل المتطلبات هذه؟ هنا يأتي وجودي معكم اليوم، وهذا الجزء الثاني من إجابتي ليش أنا عندكم اليوم. سأقترح عليكم بعض الطرق لتعزيز وتعظيم أثر مساهمتكم المجتمعية. أولاً، دعونا نتفق ونستذكر ونتذكر، وأنا متأكد أنكم أنتم تتفقون معي في أهمية المسؤولية المجتمعية. المسؤولية المجتمعية فائدتها ليست فقط للمجتمع البعيد، ولكن الفائدة الأولى تعود علينا نحن كمجتمع مسلم أصيل يمتاز بعاداته وقيمه، وننطلق من قيم إسلامية قوية. نؤمن بحديث الرسول صلى الله عليه وسلم: لا يؤمن أحدكم حتى يحب لأخيه ما يحب لنفسه. هذا جزء كبير منها، ورأينا ذلك بالتبرعات السخية التي بدأت من سواء على مستوى قيادتنا، فمثلا سمو سيدي الأمير محمد بن سلمان ولي العهد تبرع لمؤسسة محمد بن سلمان الخيرية، وأنفقت خلال 10 سنوات الماضية أكثر من 4 مليار ريال لتطوير الشباب والمجتمع السعودي. منصة إحسان التي تستقبل التبرعات الشعب السعودي والشعوب المقيمة هنا تلقت تبرعات بقيمة حوالي 3 مليار ريال خلال 3 سنوات فقط، 3 سنوات الأخيرة منذ إطلاقها. فنحن مجتمع جبل على حب الخير لا شك في ذلك. أرجع مرة أخرى، ما هي فوائد المسؤولية المجتمعية؟ الحديث الشريف يقول: ما نقص مال من صدقة، مما يعني أن فعل الخير أثره يتعدى ليس فقط للمتلقي ولكن أيضا لمن أعطى. فالفائدة عليكم أنتم كشركات تمارسون المسؤولية الاجتماعية تتعدى وتصل لكم. أحدى تلك الفوائد على موظفينكم. هناك دراسات أجريت في مناطق متعددة في العالم وليست في مجتمعاتنا نحن فقط. أذكر منها مثلا دراسة إدلمان شملت 7000 موظف في 7 دول مختلفة في 7 أسواق. وجدت أن 71% من الموظفين يتوقعون أن عملهم في شركاتهم يحدث أثر اجتماعي إيجابي. ليس فقط ذلك، ولكن أيضا الموظفين الجدد والذين الآن نستقطبهم اللي هم من الأجيال الجديدة الميلينيالز هناك دراسة حديثة ذكرت أن 80% منهم يختارون مكان عملهم بناء على المساهمة المجتمعية المتوقعة، وليست فقط بناء مهاراتهم ومستقبلهم. فهذا أحد العوامل المهمة لهم في اختيار مكان عملهم. فإذن هو يعزز تنافسيتك في سوق العمل. وقبل قليل في الجلسة السابقة عن ESGs تكلمنا عن متطلبات الجهات التشريعية وتوقعات المساهمين عن المساهمات المجتمعية والأضرار البيئية. أما بالنسبة للعملاء فقد كشف تقرير نشاط الشركات الصادر عن فوربس، مجلة فوربس عام 2021، أن 63% من العملاء في تلك الدراسة يفضلون شراء السلع والخدمات من الشركات التي تمثل هدف يعكس قيمهم ومعتقداتهم، ويتجنبون الشراء من الشركات التي لا تعكس قيمهم. وقبل أسابيع قليلة دون أذكر اسم الشركة، شركة منتجات فاخرة قامت بجلسة تصوير لا تعكس قيم المستهلكين، وبالصور التي نشرت سببت إحجام من العملاء عن شراء تلك المنتجات وحتى عن استخدام المنتجات التي لديهم، مما سبب هبوط كبير في قيمة تلك الشركة. الآن نحن متفقون على أهمية وفوائد المسؤولية المجتمعية. كيف ننفذ مبادرات المسؤولية الاجتماعية بفعالية أكبر؟ هذا ما أرغب إجابة عنها الآن. نحن ننتمي وننضم إلى شركات متنوعة ومتعددة، مجالات عملها مختلفة. ارتبط في أذهان الناس منذ زمن أن المسؤولية الاجتماعية والأعمال الخير أهم مجالاتها المأكل، المأوى، الملبس، الإغاثة، وهذه فعلا مهمة لا شك. ولكن كيف تكون فعالياتنا أكبر؟ وخصوصا نحن شركات في مجالات متعددة، هنا ما أنصح به، وهو أن نركز في مسؤوليتنا المجتمعية على مجال عمل شركتنا. ليش؟ لأنه تخصصكم هو المجال الذي تبرعون فيه، هو مجال قوتكم، ومن المرجح بشكل أكبر أنكم تحققون فيه أثر أكبر من الأثر في أي مجال آخر. تخصصكم هو المجال الذي لديكم فيه موارد متميزة فيه عن غيركم. والآن وجدنا مناحي كثير للعمل التطوعي والخيري وغير الربحي في قطاعات كثيرة خرجت عن قطاع الإغاثة. كيف نقوم بذلك؟ وكيف نزيد فعاليتنا في ذلك؟ آتي الآن إلى النقطة الثانية أو المحور الثاني في تعزيز وتقوية أعمال المسؤولية الاجتماعية، وهي الشراكات والتعاون. أهمية الشراكات والتعاون مع الجمعيات والجهات المتخصصة، فهم يكملونكم في عمل المبادرات، وكثير منهم لديهم مجال عمل متخصص واختر منهم ما هو قريب من مجال عملكم، وهم أيضا لديهم وصول كبير جدا إلى الفئات المستهدفة. أعطيكم مثالين لأعمال ينطبق عليها ذلك. هناك مثلا شركة نيوم، والتي الآن تركز على بناء عالم جديد ومدينة جديدة في منطقة تبوك، وتركز هنالك على مجالات الأعمال المتميزة والإبداعية والخلاقة، والتي اشتركت معنا في مؤسسة محمد بن سلمان بعمل مبادرات على عدة سنوات لتحفيز ريادة الأعمال بين شباب المنطقة. ودربنا سويا أكثر من 1000 شخص من رواد الأعمال الطموحين، ونتج عن ذلك أن 150 منهم فعلا أسسوا أعمال، و450 منهم أو عفوا هذه الأعمال خلقت أكثر من 450 وظيفة إلى الآن. مثال آخر ومثال أقدم بكثير من يوم، وهو مثال عزيز إلى قلبي حيث أن أنا تعاونت معهم في السابق، وهي مبادرة إطعام، والتي اشتركت فيها مجموعة من الشركات المتنافسة في قطاعات الأغذية، الألبان، الضيافة، المطاعم، وعملت بأن تستغل أو تستفيد من فوائد الطعام لإيصالها إلى العائلات المحتاجة. ليست هناك جمعية إطعام قد تكون هي الأشهر، ولكن هناك جمعيات كثير حدت حدوها. أكيد كلكم عندكم مبادرات مسؤولية مجتمعية، وأكيد أنكم كلكم تريدون أنها تكون أكثر فعالية. واليوم أحدثكم بصفتي قائد في هالمجال ومطلع بشكل أكبر من أيامي السابقة في القطاع وفي المنظمات، وخصوصا الجمعيات الجديدة والناشئة في هالقطاع. أؤكد لكم أن هناك تنوع كبير في الفرص والشراكات الممكنة إذا رغبتم أن تستفيدوا منها. فهناك جمعيات شبابية تعمل في تقنية النانو، تنمية المهارات، البحث العلمي، الأمن السيبراني، الفلك، المغامرات وغيرها، مما يحسن لا شك في حياة الشباب والمجتمع. أدعوكم من هنا إلى استكشاف هذا القطاع، وأن لا يحدكم ضيق الوقت أو الانشغال أو محدودية الموارد من التقليل من قيمة مساهماتكم، والعمل في المناطق القريبة من أماكن تخصصكم مع شركاء في التنفيذ للوصول إلى أكبر أثر لعملكم في المسؤولية الاجتماعية. وشكرا جزيلا. إن شاء الله إن شاء الله.
Thank you, Mr. Badr, for this very fruitful presentation. Next up is Mr. Ahmed Al-Khuwaiter, the CTO of Aramco. He will be talking to us about sustainability opportunities and challenges. Please help me welcome Mr. Ahmed on stage. Thank you.
Assalamu alaikum jami'an. It's great to be here talking to this audience. اسمحوا لي أتكلم باللغة الإنجليزية في هذا الموضوع اللي هو الاستدامة والتقنيات الاستدامة. My name is Ahmed Al-Khuwaiter. I'm the Chief Technology Officer at Saudi Aramco. And today I'm going to be talking to you about challenges, but actually more relevant opportunities. I really like talking to a financial audience. Financial audiences tend to be pragmatic, not too emotional, and usually very practical. And so you can really cut to the chase and get to the really important topic at the end of the day, which is what can and can't be done. So I'd like to just share with you some musings and some ideas and the big picture around energy and emissions. Now, it's not going to be a lesson here, but I'm just trying to give the big picture. This kind of is called a Sankey diagram, and it shows really the global energy system. If you look at the size of the system, that's the first thing you note, the scale. 166,800 terawatt hours. If you know electricity, you know that's trillions of watt hours. It's a tremendous system. And it consists of 25% roughly of oil, 25% natural gas, 25% coal, and 25% everything else. Everything else, actually 20% everything else, is the nuclear, hydro, biomass, and renewables. And the challenge is that this system here of energy contributes to about 75% of the emissions of the world. If you look on the right side, That's emissions. 2018, about 50 gigatons, 50 billion tons a year of emissions. 75% come from energy. The other 25% at the top is agriculture, forestry, and other land use. Things like deforestation and methane from cattle, for example. All that is that 25% up at the top. We don't count that when we're talking energy. We're only looking at, really, the emissions associated with energy. But what people don't get is the scale of the system. So today, renewables represent about 10% of electricity. I'm talking solar and wind, new renewables, not hydro. But solar and wind, tremendous advance, tremendous reduction of costs, huge scale up. Today represent about 10% of electricity, which is over here. But electricity is only 20% of the whole energy system. So that means that today we have achieved 2% decarbonization of our primary energy system only. So the challenge is huge. How do we take, if you see the purple, that's the electricity going into all the sectors. You need to make that purple take over all of those sectors. It needs to become all of those sectors. We have to convert everything to electricity. And then we have to take all of the green and make it take up all of the electricity. We have to make the renewables, the new renewables, solar and wind, basically cover all of it. So that's a tremendous challenge. It's a scaling challenge. It's a technology challenge because those industries, transport, industry, buildings, and others, don't use electricity for a reason. It's not economic in many cases, or it's not possible. Many of those sectors, transport, industry, use hydrocarbons because they need them for things that they don't use electricity for, non-electrical uses, such as heating, or, for example, chemical production. This is chemical energy. So there's a tremendous challenge to make that purple electricity become, basically supply all these others. And what one of the solutions is, of course, in transport is batteries. Batteries allow the vehicles to use electricity and start to decarbonize that sector. So just give you an idea of the whole scale of the system. But now I'd like to share with you the cost of this challenge. Here we can see Goldman Sachs Affordability, Security, Innovation study in 2022, previously called Carbonomics in the previous years. I like this. This is what's called a carbon mitigation curve. This is a really useful tool. It allows you to see the cost of mitigation for the whole world in one place. So every company, every country, every person could actually have one of these curves. This is, at the x-axis, the billions of tons, gigatons of CO2 equivalent that the world produces every year. And on the y-axis is dollars per ton needed to basically mitigate or reduce that emission. If you multiply them by each other, you get the cost per year. So if you look at today, if we were to use existing technologies, the present known technologies that we have today, and the costs for those technologies, we can actually decarbonize a significant amount of the world's emissions, up to 75%, at what I would call relatively low cost to decarbonize, easy to decarbonize, power. If you look at the orange, power, in fact, some of it is negative. That means you're making money by decarbonizing here. So we can do about 75% at about $3 trillion a year. If you multiply the area under the curve times the y-axis, you'll see that gives you about $3 trillion a year, which is, expensive, but still probably doable. The problem is when you get to things that are really hard to decarbonize beyond the 75%, the 25% remaining is extremely hard to decarbonize. We're talking aviation, we're talking steel, we're talking concrete. These are major industries. The area under that curve is actually bigger than the area under this curve. And you're multiplying it times a much higher number. So what does that mean? It means it costs a lot of money. And you've got to find ways of doing that are effective. And the way to do that is technology. You have to find lower cost means of doing that, which is why the Kingdom has proposed and has endorsed, and the G20 did endorse, the circular carbon economy. The circular carbon economy means we must apply all technologies available. We cannot rule out certain technologies because we ideologically don't agree with them. And that's basically the concept of combining both reduction technologies as well as removal technologies. What do I mean by reduction and removal? Reduction are technologies that we all know from the media. It's renewables. You know, you basically reduce the use of a hydrocarbon in electricity, for example, by using renewable electricity. So you don't use that hydrocarbon. Electrification of transport is one way of reducing the use of hydrocarbons in our economy, and that's another way of reducing. Energy storage, still in an early stage, still at pilot phase, hasn't scaled up yet in large grid scale, but it's there. And finally, electrification of everything we know, what I talked about before, electrifying the big industries, steel, concrete, and other industries. Those are your reduction technologies. Removal technologies are less well known. They do that. They're less well known because they have a relationship to hydrocarbons, and therefore people don't like to talk about them. They think, well, we don't need hydrocarbons, we don't need them. But if we don't use them, the world's going to pay a very high price, and I'm going to explain why. Point source carbon capture. Carbon capture, you've heard of it. Nature-based solutions, forestry, and other means of naturally capturing CO2. Low carbon fuels, hydrogen, e-fuels. We hear a lot about hydrogen. We don't hear as much about e-fuels. And finally, direct air capture. Really a technology which is coming just now, beginning to take hold. So that's pretty much the big categories. There are many other technologies, but I would say these are the big opportunities. What happens when we say we're only going to use the removal technologies? When we only use the removal technologies, such as renewables, and we don't use carbon capture, we don't use hydrogen, blue hydrogen, other technologies, what we end up with is a cost curve of reduction of emissions, which adds $6 trillion a year to the bill for decarbonizing the world. So we go from $3 trillion a year to $9 trillion a year. When you include removal, you actually are able to cut that cost down dramatically, which is why it's obvious for anybody with financial sense that we should be doing removal technologies as well as reduction technologies when it makes sense. In the first 75% or around 70%, it makes sense to do a lot of reduction technologies, apply renewables, go full steam ahead for power generation. But when you're going into petrochemicals, cement, steel, maybe it doesn't make so much sense to try to convert that entire industry to be electrified and then provide the renewable capacity needed to meet that, because the costs go up dramatically, exponentially. So we really need to do a combination of remove, and this is what I call the $6 trillion opportunity for our investors. So everyone here, the herd is back here in the 75%, seeking that $3 trillion opportunity. The real smart money is in the $6 trillion a year opportunity, because that's the hard one, and that's the one that nobody's investing in, and that's where the money is. If the world really wants to decarbonize, these are the technologies that are going to make the money, because the difference, the price, the cost versus the price is tremendous. That's why we're investing in carbon capture. Saudi Aramco is announced one of the world's largest, actually the world's largest today, stationary carbon capture project. It'll be in Jubail. It'll be 9 million tons a year. That puts it beyond anything that's been announced so far. We've already started engineering, and we will, by 2027, we will be sequestering 9 million tons a year from this project. But that's the first phase. There's going to be many other phases because we believe there's a huge market opportunity going forward. I shared it with you. A lot of the technologies that will be used are technologies we are commercially available today. We've tested them, and we will be developing additional technologies and advancing and lowering the costs so there will be even greater profit. Nature-based solutions. This is a no-brainer, I have to say. But unfortunately, it doesn't get too much attention. But in fact, from a cost of sequestration of CO2 globally, this is the lowest cost option. And it has a biodiversity benefit. You know, replanting the world's forests improves the biodiversity of the earth, improves our quality of life, and it costs us almost nothing. I have to say, $7 to $10 per tree, which gives you about a ton over its lifetime, a ton of sequestration. So $7 a ton of CO2, tremendous value. And you get the side benefit, of course, of improving our environment. So it's just amazing. We've been planting mangroves in the kingdom, 13 million mangroves and counting. We'll be scaling that up with the Saudi Green Initiative, and we'll be trying to maximize our land, other trees plantation with drones and technology that we're applying for the plantation. Low carbon fuels. Sometimes you need a fuel. In many of the hard to decarbonize sectors, the best option to displace hydrocarbon is actually hydrogen. It's almost a drop-in fuel. It goes into the same equipment, into the same boilers, into the same furnaces, and therefore the capital costs are much lower if you can utilize a low-cost hydrogen. And we have proven that we can turn hydrogen into a global commodity. Saudi Aramco and SABIC, working with IEJ in Japan, demonstrated the first global shipment of low-carbon hydrogen from Saudi Arabia to Japan in 2020. And we shipped last year a commercial shipment of 30,000 tons approximately of blue ammonia. What's called blue ammonia is low-carbon ammonia, which is a low-carbon hydrogen transport medium. Will become we believe it's going to become one of the big industries because it is one of the few options for decarbonizing the hard to decarbonize sectors. We expect this to become a global industry very similar to LNG in the 60s. It was very much an experimental technology. And today, everybody knows what LNG is. It's a multi-billion dollar industry. And this should be, in 2050, a similar size industry, which is why in 2030, we're targeting 11 million tons a year of blue ammonia, equivalent to about 2 million tons of hydrogen exports per year. I didn't talk about e-fuels. E-fuels are a derivative of green hydrogen or blue hydrogen. You take CO2, you mix it with, react it with hydrogen, and you produce a liquid hydrocarbon fuel, which can drop into an airplane, for example, to produce sustainable aviation fuels, or into a vehicle for a truck or a car. Finally, direct air capture. This is still in the labs. We're seeing a few experimental tests. We ourselves are doing a lot of experimentation in this area. And the idea is basically to capture CO2 at a very, very dilute stream in the air of 440 parts per million, concentrate that, and then sequester, store that, or use it. Now, the costs today are in the $400 to $800 per ton. A number of companies globally, very small scale. As this technology improves and scales up, we believe it will achieve the $100 a ton target, which will make it, as I showed you previously, one of your best options to decarbonize the hard to decarbonize sectors, and therefore really a tremendous profitable business if direct air capture can work. And there's a lot of people betting on it today, including ourselves, through our ventures. We have announced in October a $1.5 billion venture capital fund around sustainability, investing in these hard to decarbonize sectors, which are really a great business opportunity, and I would recommend this area for investment definitely. Today we're investing in R&D, we're investing in venture capital. Regulations are beginning to recognize the importance of this sector, and so we saw, for example, in the US, the Inflation Reduction Act really recognizing this through incentives for carbon capture and direct air capture. We're seeing it also in Europe and the UK and others recognizing the importance of these removal technologies. So whether we call it a duck or we don't, it is circular carbon economy and it quacks, it's a duck. So thank you very much.
Thank you, Mr. Ahmed. That was extremely beneficial information. The next topic right now is about EVs, and they're a big thing in the kingdom right now. SEER is planning to design, manufacture, and sell a range of vehicles for consumers in Saudi Arabia and the MENA region. And we've also got Lucid in the kingdom, who's also witnessing good market presence. And the PIF had a big role in that. So next up, I would like you all to welcome Mr. Haytham Hunjun, the head of strategy for SEER and PIF. Please help me welcome him on stage.
Thank you very much. So bridging from the previous presentation, we are working on a reduction technology. So very interesting presentation before this one. So firstly, I'd like to welcome you all here on behalf of SEER and thank the Saudi Tadawul Group team for the opportunity to be speaking to you today about the international and local shift to EVs and some of the key players in the local ecosystem supporting the successful establishment of an automotive company and sector in the Kingdom of Saudi Arabia. I'd also like to give you a brief synopsis of SEER and the associated economic impact of establishing such a sector, generating a new source of jobs for national talent and elevating the Kingdom's success and competitiveness in this sector. So during my time with you today, I'll be providing you with an overview of the global trends towards EVs, showcasing the Kingdom's direction towards electrification through Vision 2030 and other key initiatives in the local ecosystem. I would then like to provide you with and highlight some of the key contributors towards the ignition of an automotive ecosystem and industry in the Kingdom, and as well as presenting a glimpse of SEER, the Kingdom's recently established national automotive company. I'll also be touching on some forecasted contributions to the local economy resultant from establishment of such a sector. Okay. So on this page, you'll see the global proliferation of electric vehicles versus in the internal combustion engine vehicles from the year 2015 forecasted up to 2040. As you'll observe, EV adoption is steadily increasing thanks to the global targets and commitments set by governments across the world. In addition, consumer awareness and education, as well as the acceleration of technological progress and required infrastructure. It's noteworthy to mention that at the end of 2020, you'll see that EVs comprise of approximately 3% of total vehicle sales. However, it is projected that EVs will take the lion's share by the year 2040, with a penetration rate of approximately 54%. This is all based on today's data, as nations continue to establish mechanisms and infuse customer and OEM incentives to increase the rate of adoption in electric vehicles. So one point you might be thinking to yourselves, well, what about hybrids, right? And why they haven't been considered on this chart you see in front of you. Well, we've made a conscious decision not to include hybrids and not to highlight this, as we believe the proliferation of hybrids will undergo a state of decline as transitional technology, given that the product assumes the complexity of both the internal combustion engine as well as electric vehicles, from a CapEx perspective as well as the required manpower and skills to deliver hybrid vehicles. On this page, you'll see that there are multiple countries across the globe initiating policies, laws, and regulations to inorganically accelerate the adoption of electric vehicles. And really to meet their targets and commitments through net zero, through electrification. I will clear the continents from left to right, starting with North and South America. In the United States, there is a plan in place for all federal vehicles in 2020 to be net zero and net zero emissions, which constitutes approximately 650,000 vehicles. Costa Rica has already reached 40% sales of electric vehicles, and this is supported by their 2021 drive by their national decarbonization plan. In general, the value of electric vehicle market in South America is forecasted to grow at a rate of 14% CAGR between the year 2020 and 2026, where we've already seen some of these results materialize between 2020 and 2022. The European Union is aiming to have 30 million net zero emission vehicles on its roads by 2030. If we move to Africa, in Kenya, the sales of two-wheeler vehicles, EVs, are expected to account for 60% to 75% of a total two-wheeler sales by 2040. If we move to Asia, China aims to elevate the sales of electric vehicles representing 40% of vehicles on the road by the year 2030. Staying in Asia, going down to India, it's currently improving and expanding its public charging infrastructure through the addition of 22,000 charging stations in megacities, as it announced in early 2022. Last but not least, Australia, where the plan is to invest $41 million by the year 2025 in efforts to strengthen the EV public charging infrastructure, with hopes to significantly drive up the EV adoption rate in Australia. So the automotive industry is being built up as a key industry to the kingdom. This undoubtedly requires the efforts of multiple players locally to collaborate to make this a reality. These are entities we, as the national automotive company in the kingdom, continuously work with on a flurry of topics. Just to pick a few here, the Ministry of Investment has been supporting the sector on multiple counts and fronts, whether it's Lucid, Seer, or other incoming OEMs. The Ministry of Investment also plays a critical role in attracting tier suppliers to the kingdom to begin filling the gaps within the value chain. If I move to Cake, which has a vision to become the future automotive hub for the kingdom and the home of Seer's manufacturing plant, along with Lucid, which you may have also seen in the news, both our factories will be co-located along with other OEMs that have been publicly announced recently. Another entity I'd like to highlight here is Sasso, who have initially developed, all the way back in 2018, the technical specifications and standards for electric vehicles and the respective chargers, which was revisited since then 3 times to ensure that it evolves with the technology that's being brought to the market, with the latest update being in 2022. So the kingdom has been active and clear in its position to build an automotive industry and to transition from ICEs to EVs, which has been demonstrated through several initiatives. To zoom in on a select few of entities and initiatives critical to the success of an automotive sector, I'd like to touch briefly on their roles as it relates to igniting this industry. Vision 2030 has set the scene by laying out multiple direct and indirect pillars spanning across social, economic, and environmental values, many of which will link very well to the establishment of an automotive industry, as well as the creation of a national automotive company. The PIF's automotive pillar, one of 13 pillars of the PIF program aiming to grow this sector through multiple opportunities. The Ministry of Industry's National Industrial Strategy, announced last October, has highlighted the automotive sector amongst the 12 strategic subsectors for the Kingdom of Saudi Arabia. Finally, but definitely not least, the Saudi Green Initiative, which is the vanguard of the Kingdom's efforts in response to climate change challenges. An example of its automotive-related targets is the increase in electric vehicle adoption in the capital, Riyadh, up to 30% by 2030. I'd now like to provide you with a brief about the Kingdom's first national automotive company, Seer. As touched on before, there is much association with KSA's Vision 2030 through the National Industrial Strategy, Saudi Green Initiative, and the goal to transform the Kingdom into a leading industrial powerhouse and logistics hub. We established Seer in March of 2022, and our public announcement took place at the Boulevard. Digressing a little, our drone show during the company announcement broke a Guinness World Book of Records by displaying the largest QR code in the sky and was accessible to actually take you to our website upon taking a picture of it. So we're very, very proud of that. As a company, we're built on a solid joint venture between the PIF and Foxconn. Further, we have a strategic partnership supported by BMW to provide the platform of our first portfolio of vehicles. SEER, as you may imagine, is also aiming to continue championing the efforts and initiatives to support the ignition of a local automotive industry by working with global tier suppliers, support the upskilling of local suppliers, and work with government entities and the wider ecosystem. SEER's product portfolio will include high-tech, innovative SUVs and sedans at the state-of-art manufacturing facility in Cake. Moreover, we will adopt a direct sales model which will enable us to own our customer journey from cradle to grave and ensure they are well served across this entire spectrum. I'm also very excited to share with you some economic impact we will see from SEER, as well in tandem to the impact of establishing an entirely new sector in the kingdom. We have bucketed the impact into direct, indirect, and intangible. Now, starting with the direct, we envisage economic leakage reduction by $38 billion accumulated by the year 2034, an increase in approximately 6.5 thousand direct jobs, $8.1 billion in direct GDP creation, also accumulated by 2034, an FDI of $150 million. From an indirect standpoint, we envisage the addition of 23,000 indirect and induced jobs, over 3 times investment GDP impact, the call for increased skills and innovation, robotics, and digital technologies. And a key pillar, of course, is the enablement of the broader supply base for the KSA car park. From an intangible perspective, this endeavor, of course, brings a sense of national pride as the homegrown brand of KSA's national automotive company. It also drives the need for an automotive-related academic programs, whether in academies, training institutes, or universities. Such a project would also position the kingdom to become part of the global automotive ecosystem, as well as diversifying the national industrial footprint and enhancing its competitiveness. So PIF's vision to become a leading global ESG investor by 2030. This is supported by some announcements you may have recently seen. Us, as SEER, will follow in the footsteps of our majority owner, the PIF in this case, and we're working on defining our ESG objectives around those of PIF within the context of the automotive industry. With that, I'd like to thank you all for giving me the opportunity to be here and present a global and local direction around towards EVs. Keep watch as SEER is working on many exciting activities and activations within the kingdom, from igniting the industry to engaging the public to learn more about what EV adoption means for them and how we can redefine mobility. I invite our audience here tonight to follow us on our social media accounts, Twitter, Instagram, LinkedIn, to stay on top of all things SEER and EVs. We at SEER aim to shape Saudi Arabia's future in automotive by being agile, take bold steps, create unique solutions that have an impact through the creative use of cutting-edge technologies. Thanks again. Have a pleasant evening.
Ladies and gentlemen, it has been a fruitful day here at the Saudi Capital Market Forum. Thank you so much for tuning till the very end, and we will be reconvening tomorrow. Thank you and have a good day.